Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey, good morning. Welcome, guys. Good morning, everyone. It's Wednesday morning, almost 7 a.m. We're going to get started in just a couple minutes. I'm just setting up YouTube, and we're going to get started. Hope everyone's having a great day, a great morning so far. I know some of you guys have already been trading London session, coming in now into New York, when all of us are getting up. We'll be getting started very, very soon.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey everybody, welcome to Stocks Numbers Trading. My name is Ron, my partner is Dave. It is almost 7 a.m. Eastern. Welcome everyone. I hope you guys had a great evening yesterday, and I hope you guys had a pretty good morning so far. We're going to get into the markets. We're going to go for 3 hours into 10 a.m. And we're going to take a look at gold, NASDAQ, US 30. Very, very soon, we're going to start to add another security in the mix. A lot of you guys do trade oil. We could take a look at crude oil too. But I just wanted you guys to get comfortable with gold, NASDAQ, and US 30, and then we can start to add some more securities as we go along. So thank you for everyone for yesterday, for all of the participation on YouTube, for when you guys are subscribing, hitting the notification bell, liking the channel. Thank you guys. We're going to do a giveaway for the free month of the SST Trade Ideas and Signals to a lucky winner for that for the likes. Hit over 300 yesterday, so we'll announce that today. So thank you guys so much, and we're almost at 82,000 subscribers. We just need another 25 more, and we're going to hit 82,000 on the road to 100,000. So we appreciate you guys. You guys are part of this. We couldn't have done it without all of you guys. So again, thank you to you guys for helping the channel grow. We do appreciate it. Okay. And so we had some news yesterday in the market. There was some after hours earnings and things like that. So we'll recap all of that and today's news. We'll go into it as we lead into COMEX. That's the commodities exchange, which opens up at 8:20 a.m. Eastern. And then we go into Wall Street, which opens up at 9:30. And then we'll take a look at if there's any high impact news today, okay? So just getting started, let's get started with some news. I know you guys have already probably looked at this, but let's just do a recap for those that probably missed this. Today's date is Wednesday, August 6th, and we already had lots of European news come out right prior to London market opening up and after. There was some German news, French news, Italian news, some British news. These are all low impact folders, but when you have consecutive of these folders, it could provide volatility. Okay. And then now we're moving into North American, the North American sessions over here. And normally at 8:30 a.m. Eastern, there is some US or some Canadian medium high impact news. over here. Today we have nothing. So we have no news coming out of North America until we hit after Wall Street. And then we have news coming out usually every Wednesday. We have weekly crude oil inventories that are coming out. So again, if you're a crude oil trader, I would pay attention to these crude oil weekly inventories because they do affect the supply and demand of global crude oil. So these are good to pay attention to. You already have the previous, you have the forecast, and we'll see the actual numbers here today. We also have the 10-year bond auction just after 1 p.m. Eastern today in the afternoon. We have our 10-year bond auction, and then we also have this week the 30-year bond auction. So the higher the bonds, the 30-year and the 10-year really dictate how the markets move interest rate wise, because the 10-year is directly related to mortgages. And if you guys remember back in 2008, we had that subprime mortgage crisis, which caused a little bit of a mini financial crisis when that broke down. So we really want to pay attention to the 30-year, 10-year. We're going to see if the 30-year is going above 5% this week. The 10-year is previous was 4.36. We'll see what the forecast and the actual number is when they come out this afternoon. And these directly impact the lower interest rates on the 5-year, 2-year, on the 1 year, and then we'll see on our next FOMC if Powell is indeed going to decrease these interest rates. We also have FOMC speakers throughout the day. In the mid-afternoon, we have FOMC member Collins, Cook, and Daly speaking. Then we go into the after hours where Wall Street closes, and then we have some after hours earnings. And then we shift over into Australia, New Zealand, and we head on over into Tokyo, and the futures market opens up. Okay, so that's the news. Today is Wednesday, midweek. We might have a midweek continuation on securities or maybe a midweek reversal on some securities. So we've been talking about this to know how the markets work on a 5-day weekly basis on Monday to Friday. And Wednesday is one of those days right in the middle that could continue a trending move or possibly reverse a trending move. Okay, so it's up to us to pay attention and to look at closing bodies of candles. Again, the higher the time frame you are analyzing, then the more weight it holds. So if you're focusing more on the weekly and the daily and the 4-hour, you're looking at higher time frame structure than what we're looking at as intraday or scalpers on the 15-minute, 5-minute, or even the 1 minute. Okay, so it's a different outlook for everybody, but we all should be starting from the top and moving our way down. So even I'm a scalper on the 1-5 minutes, I'm still paying attention to the weekly and the daily, probably more than some swing traders are doing. Okay, so that's why it's good to do a nice thorough analysis even prior to trading. Okay, so set yourself up for success. Take some time out of your day, 10 minutes to do a proper analysis and trade those levels, those points of interest, and those blocks in the market that you identify. Okay, earnings. We've had big earnings last week. We also have another big earnings week this week. It'll slowly start to taper off, but we go through these cycles every quarter. Okay, we had a lot of tech earnings. We had a couple weeks prior, we had a lot of finance earnings, the big banks. And today, let's take a look at which names we have. Some of these names you're familiar with. Some of them we don't even know what they are. And I'll be honest, some names I have no idea what they are myself. Okay, it's hard to know every single one of these publicly traded companies. But I focus on the larger, higher market cap ones, the bigger names that we're all familiar with that commonly trade in the indices that we trade, NASDAQ, US 30, or S&P 500. So Wednesday, August 6th, before the open, Uber Technologies, you guys have heard of this company. Let's just refresh everything because they've already reported here at 6:05. So they beat their earnings per share, 62 cents. They beat it by a penny. That's still in the green. That's good. Surprise is 1.6%. The revenue report will be coming out very, very soon, shortly here. They're looking at revenue of 12.46 billion over quarter. We'll see if they exceed that or if they disappoint in the revenue. That will be coming out. Most of you guys maybe use Uber. There's Uber Eats, there's Uber Taxi, all of this thing. Are they growing? Are they losing market share to other ride companies? All of these things. It's good to know these things. And you can possibly trade Uber on the options or buy shares of the company, okay? So Uber reported just now, right prior to us starting the call at 6:55. Shopify is reporting right now. Novo Nordisk is reporting. Oscar Health. Walt Disney, okay, they are reporting. They had EPS. They just beat right now. Big surprise on that, on their earnings per share. Also, we'll look at their revenue. Walt Disney. McDonald's is probably a company that most of you guys are familiar with. I try to the best of me not to eat this stuff, but those pancakes, early breakfast, are amazing. And their iced coffee for $1, you can't beat that. Okay, so that's why I go there. But McDonald's reports today, 7 a.m. right now. We'll see what's going on there. My kids love the chicken nuggets over there. And those are the companies. We also have Dave reporting this morning, so we'll keep an eye on Dave. Dave is giving his financials today. So Sniper Dave over here will be releasing. Dave is looking at $1.47 per earnings per share. And Dave had a good quarter trading. He's looking at making $113 million. So congratulations, Dave, over here. I'm just joking. This is not our Dave. This is a company Dave over here. And then in the after hours, let's take a look in the after hours, which names we have going on over here. Okay, some names, again, you're going to be familiar with, some maybe not even concerned about. Okay, we have AppLovin Corporation, Duolingo. This is like an online education. My daughter uses this. She's learning some languages right now. So Duolingo is there. IonQ, Elf Beauty, DraftKings. Okay, for all of our bettors out there, our gamblers out there who do online gambling over here, you have DraftKings sports betting. They're a publicly traded company. Some of you guys didn't know that, but yes, they are. I remember when they IPO'd, when they came out, when they went public. I remember exactly how much a share was because I bought in, and they took off. And since then, they've really retraced down. This DraftKings really took off during COVID because everybody was in lockdown. Everyone was at home. The casinos were closed. So where did people take their online gambling and their over here to DraftKings? So they really blew up during COVID and have slowly came down to reality when casinos have opened up. Okay, so that's how you can follow trends in the markets. You gotta just look into these things. Okay, and there's lots down there. There's DoorDash, there's Lyft, Airbnb are all reporting in the after hours. Okay, so that's for today. News-wise, always I get up early when I'm doing some exercise, when I'm on the spin bike. I'm in my sauna and I'm reading here some of this news. AI and GLP-1s were hot post-pandemic trades, but only one is thriving. So the tech trade is proving resilient, while firms that gained by helping people lose weight are faltering. So you guys probably remember this. There's a company called Hims, Ozempic, and things like that. So there's weight loss that helping people lose weight. Some people we can debate it whether it's healthy or not healthy, but some of them are publicly traded companies, and you can invest in these companies too. U.S. stock futures climb as earnings take center stage. So we're going to go through earnings, some big names happening. China pushes back on U.S. chip tracking amid ongoing trade tensions. So this is ongoing. Shouldn't be a surprise for everybody. U.S. and China have been bumping heads for years now. So we'll see if these guys can reach negotiations, and or are they going to continue just bumping heads and have tensions. AMD had earnings yesterday. So this is a big chip company, very similar to NVIDIA. This is the CEO here. AMD slips on mixed results, but reassures investors over AI demand. So AMD took a little bit of a hit in the after hours. Forward guidance reassured investors that everything is good to go, but just it's kind of some misses on the earnings were concerning to investors. NFL, that's National Football League, NFL, Dallas Cowboys. I'm going, if anyone wants to join me in Chicago, Illinois, I believe it's September 21, 22. I will be there Friday, Saturday, Sunday, and coming back on Monday in Soldier Field at Chicago, watching my Dallas Cowboys play. I go on a road trip every year, so we're going to Chicago this year. So if there's anyone from Chicago, any snipers out there, love to meet you guys. We're going to go see at the United Center where the Chicago Bulls play. We're going to see the Michael Jordan statue out there, everything, the Hall of Fame, all of that. So that's going to be a fun trip coming in September. If anyone wants to join me, you guys are welcome. So NFL to take 10% stake in ESPN in deal with Disney. Okay, so I look at these things. I watch football every Sunday, and now the NFL is taking a 10% stake in ESPN in deal with Disney. So you saw Disney reported their earnings. We can trade these companies, all of these things. If you guys see that, like Netflix, remember Netflix? We watch Netflix, but we can trade it. We can buy options. If you guys remember back during Christmas, they played three NFL games on Christmas, first time ever. So they got that. And if you guys remember the Jake Paul boxing against Mike Tyson, that was on Netflix. I went and saw my nephews over the weekend, and WWF, when I was growing up, World Wrestling Federation, now it's called WWE, with like The Rock and John Cena and everything. They had the SummerSlam, and it was live on Netflix just this weekend. It was a 2-day event. So it's taking away from pay-per-view, and it's going on Netflix. So this will affect their earnings in the next coming when they release their earnings. So I look into these things because I trade these companies. So it's good to stay on top of things. And when you're watching Netflix, look at what they're doing. Are they releasing new series and things like that? Because that could get more subscribers, create more revenue for them, and ultimately maybe increase in share price. And if you're a trader or investor, you can make some money as well. Okay. Goldman Trader says buoyant stocks are ignoring recession risks. Oil rebounds with focus on Trump's threat to Russian supplies. Okay, so if you're, again, crude oil trader, you got to focus on what's going on between Russia, India, US, and also the weekly inventories that are coming out today at 10:30 in the morning. Okay, so what else do we have going on here? Let's just see. I'll let you guys read a little bit of the news. AMD Q2 results, sales beat, earnings miss, strong outlook. So there's a little recap of AMD if you missed it. Snapchat sinks on Q2 earnings. So all of that is in there. And then we got McDonald's today. In the pre-market right now, in the futures, we got S&P futures are up 0.25%. Dow is up 0.35%. NASDAQ is pretty flat here at 0.06%. Gold is down negative 0.5%. Okay, so let's just continue moving forward here, guys. In our Discord Signal SST Trade Ideas section over here, there was a trade that came out earlier this morning at 6:15 a.m. Eastern on a buy on US 30 at around 44,278. And here's the chart. So above 278 is right over here. Again, it's a nice little double bottom, getting some volume closing above there. There could pull back a little bit more, but we're looking to continue to move to the upside over here on US 30. We'll take a look at that when we get to the charts. Gold, commodities over here, and oil. Let's take a look. There was at just after 6 a.m. a short on gold, approximately 33.60 to 65 area, looking for a push down, maybe to come down, take out these lows down here to 33.50, maybe push down. It is pushing down, lower lows, lower highs, lower lows, lower highs. Just looking for that volume to continue to to close below there, maybe continue pushing down. So we'll also monitor that as well. It did push down and then the retracement back up, so we could get that stronger second leg coming down. Okay, keep an eye on that, guys. If you guys are on the charts, I still just got to go over all the news and then we'll revisit everything. Also on Telegram, we have a free Telegram available for everyone on YouTube. Amazing, guys. Thank you guys so much. 150 viewers. We do appreciate you guys. If you guys wouldn't mind hitting the subscribe button, if you're not subscribed, hit the notification and like the channel for more giveaways that we're going to be doing. So this is the free Telegram. It's pinned at the top of the YouTube for you guys. We give you guys all of the links, our live trading links for YouTube, recaps of our trade ideas, and also members success and everything. Guys, if you remember back, we did some blogs on El Dorado Gold Mining Company and this one Eris Mining Company. I'm in it right now. I'm up 5% on it. It's a swing trade for about 5 to 10%. So today they're going into earnings tomorrow, so I might reduce my risk and take some profit and go to a break even. And we also have members in the group. So right here, SST member bought both of them. And here's Eris Mining and up 8.66% as of yesterday, and El Dorado Gold over 9%. So nice little swing trades right there, almost 10% on each of them. That's great, you know, so good to look for sound securities with some upside momentum. Gold is pushing up. There's demand for gold. So if you take it a little further, how do we get gold? You got to mine it out of the ground. You got to mine it out of earth. So there's multiple mining companies that are publicly traded companies that you can all take a look at. And we'll continue doing blogs on different sectors and different names. For us to do our due diligence, add it to our watch list, and just watch them, okay? So here's our trade ideas, signals, breakdowns, how they come out, and a little bit more. And Mr. Powell over here, this is my accountant seeing that I placed 1,500 trades this year to only make 20 bucks in profit. So he's puzzled, but maybe I got to explain to him I had a lot of break evens this year. So, so that's Mr. Powell right there. And our blogs, guys. The power of compounding your account can benefit you in the long run, okay? So remember, it's a long race. Think not just for today. Think in the future, 3 months, 6 months, 1 year, 2 years, 5 years down the road. Where do you want to be? Hopefully, a lot of you guys are learning this and can continue to grow your accounts, guys. This is our website, stocksnipertrading.com. If you're looking for education, we have a lot of education with myself and Dave through courses. We've got boot camps, long form boot camps. There's a lot of webinars. Okay, there's over 100 plus webinars. They're approximately 2 hours or longer in length. So there's a lot of content here. Will take you a while to go through all of this stuff. Because there's a lot, okay? And all of our live sessions that we do here at SST refer to our weekly trading schedule. And then also the free blogs, what I was talking about, are over here. There's the one, Power of Compounding, our weekly outlooks for members, how to trade the news. You remember last week was an intense news week where we had jolts, we had FOMC and NFP all in 1 week. So it was heavy news-wise, how to trade it. Here were the blogs we released on July 22nd, El Dorado Gold, a little brief explanation of what it is and some charts to help with some analysis. And also Eris Mining, which was July 16. So we it's up 10% respectively since uploading these, okay? So, and then weekly trading routine and various other blogs. If you guys have any ideas for new blogs, let us know in the comments, okay? In Zoom, if you want some new blogs, new education, let us know. This week Friday, we're going to talk about the bodies of candles in the crash course. We did last week the wicks. So we're going to do the bodies this week, okay? Guys, let's get into the charts. Before we begin, let me know both in Zoom and YouTube, what is the main thing that you're struggling with trading that you really want to learn? So for some of you guys, it might be you want to learn a little bit more about price action and technicals. For some of you guys, maybe you want to learn more about fundamentals, like learning about different securities like Eldorado Gold, or taking a little bit going into the fundamental economic side of the financial markets. Some of you guys maybe risk management. Some of you guys are battling with psychology and emotions, how to deal in drawdown, in profit, all of these things. What are the biggest concerns that you guys are having as traders? Add it in the comments. I read the comments after every single call, and it does help Dave and I here at SST to maybe think about what we need to do on these live calls, for education and things like that. We're here for you guys, so whatever it is that you guys need help with, let us know. Okay. FOMO and zone. Right. Nice one, handling the oil. But thank you guys. Add them in the comments, okay? While you guys are doing that, I'm going to get started with breaking down gold. Okay, so again, we're exactly 1 hour away from COMEX market opening up. That's the commodities exchange. Specifically, it's an exchange that trades volume of gold, silver, and other precious metals. Okay, so if you are a gold trader, you should be aware of this time on a daily basis, Monday to Friday. It opens at 8:20 a.m. Eastern and it closes at 1:30 p.m. Eastern. Okay, and it is an exchange dedicated to the volume and traders of gold, silver, just to name a few, and other precious metals. Okay. So let's get started on the daily. Right now, this is how it's moving on the 5 minutes. It looks like possibly like a double bottom breakout with higher lows ascending. And here's our neckline. So just right now, I would be watching this area right now, 3365. See right here. If we can possibly maybe break out of here, close above, maybe possibly retest this, we could be pushing up a little further right now. You can see how it is ascending, how it is coming up with right now with these nice higher lows. So right now it's just met its resistance where it came up, pushed back down, came in here, they pushed it back down, it's coming in around one more time. Can we actually break out of here impulsively and maybe physically close above here? So if you are looking for buys on gold, this could be a good opportunity above 33.65. But again, I haven't done a top down, so I'm just what I see on the 5 minutes right now. But let's do a top down. Let's start off with the daily and bring things down. Okay. So what we do here on a daily basis is we do this analysis. Okay. We've been stuck in this range for quite a few months. You can see it kind of has been mid-April since we've been in here. And in this time, we've hit all-time high. We've retraced back and we're continuing to trade inside here. So let's just mark our all-time high on gold right up here. I'm going to do it with an orange line. 3,500 is our all-time high on gold. And since the all-time high, most recent pullback to our lowest point is right over here. So I kind of have my overall range from the all-time high to the most recent pullback, and you can still see the volume is still trading inside these orange lines over here. Okay, so what was the date when we hit the all-time high? We broke out, it was April 22nd when we hit up there, but there was a big rejection when we hit that 3,500 psychological number up there, and then we came back down, and then you can see we pushed down, we came back up, there was a double top. I'll do all the boxes in just a moment, but then when it hit that double top, it continued to push down where we made that lowest point right there. There was a good rejection from the buyers where we traded into about 50% of this very important candle. This candle, this second body candle, you see it closed above all of that resistance. So when you identify that bullish pocket, that golden zone, that mid 50%, 618, 382 zone, and you stretch it across, that's exactly where that sellers came right into, and they transacted with those big buyers, and you can see the response coming out of there. And then we kind of barcoded and we continue to trade back in this zone where it came up into that supply again, just below that all-time high, pushing it back down. But you notice it's making higher lows higher lows, that ascending formation, kind of what I just showed you on the 5 minutes. And then there was the first daily bar that impulsively broke out of that resistance and closed above, and it continued, but we have that solid big block up here that continues to push gold back down, where we came down for this 1 week, 2 week downtrend, making these lower lows and lower highs, again where we found good support down in here. And last week we've been coming right back up. Now we're kind of consolidating. I think we're finding our neckline on the daily inside here. We got some consolidation candles on 3 days here. So yes, it could consolidate, it could come back down, it could come into about 50% of this big bullish candle on Friday. You remember that was NFP, or we could continue to try and come back up to this block. So where are these blocks that I'm talking about? Now let's identify them. So how do you identify a block? I get this question. If I had $1 for every time I got this question asked, I would be retired right now. So it's a common question, guys, and I understand why everyone asks it. Even me, when I was learning this, it was a common question that I kept asking myself. How do you identify these? They're easy to identify after the fact. You know, after they print, oh, then you can see it. But when they're actually happening in real time, how do you identify these? The way how I do it, guys, and please pay attention to when I'm saying this so I don't have to keep repeating myself. You see this big candle that broke out for the all-time high. You see the big exhaustion wick, the big rejection. Okay, so what is actually going on is those sellers are absorbing those buyers, and there's more sellers than there is buyers when the final body closes. And then you see where the body came down, and look at where it closed. So right there, those two bodies, do you see how I kind of trapped that volume? Sometimes that's all it takes, is just two bodies. If you get three bodies, see that big blue volume and then that bearish candle coming down right there. That's all it takes. And back over here on April 21st and 22nd, I boxed that in, that exact zone. You can go back and watch. These videos are dated, and you can go back and watch the videos and see. But one thing what I do was to help me identify in the future when the volume comes back in, and then I decide, and then you can clearly see, will it be a double top? Will it be a triple top? Will it be a quad top? What will it be? Or will it break out and flip this zone? So what I do is, when I see it like that, I see the big rejection, sellers are in control, and they closed it down there. So I'm just getting that body of volume in there, and I make it red to represent sellers. And then the next thing I do is I stretch it. I don't change the size of the zone. I don't make it bigger or smaller. I just stretch it into the future. Then there you can see when it comes all the way back up, you can see it's basically a double top fake out. It closed above there, but when it opened, it didn't come and get a wick and retest this and start to continue to break out to that all-time high. You see how strong the sellers are. And this is a midweek reversal. This is a Tuesday close going into a Wednesday. What we are doing today. Yesterday was a Tuesday close, and today is a Wednesday. So you see the big selling candle come back down, close below, and then this next day opened bullish. Look how it came now into that red zone, and the sellers are there. They're absorbing those buyers and creating a lower high, therefore pushing the market back down. So that's what we call a double top or an M pattern. Okay, you can clearly see it comes up, goes back down, comes up, and goes back down. It looks like an M, double top. If you continue stretching this zone into the future, you can see again, early June, we came in here, and what were the results? We came into about 50% of it. Sellers are still there, absorbed those buyers, and pushed it right back down. We came again, a fourth time, where again, the buyers closed strong above there, but we didn't get any retest where it comes down and picks up like depth of market of buyers. You can see how strong the sellers are. And notice the date and time of this. This was a Friday close going into the weekend. Over the weekend, there's some news, and then selling pressure continues to open up the next week. And what were the results? Engulf those buyers in that big red box and continue pushing it down. So let's just continue with that red box going into the future again. And now this might be a little bit more recent. You guys probably remember this. This was July 21st. Coming in here again. And when did we close above there again? Look at a Tuesday, Wednesday reversal. Okay, again, yesterday was Tuesday, today is Wednesday. You got to pay attention to these days and closing body candles and how they open. You see again how the buyers closed strong. Look how many times they closed it above there. But then the next day, they kind of faked it out a little bit and then came all the way right back down and engulfed them. And then this is what led to that weekly downtrend. And again, look at now. I'm stretching it into the future, and I can see we traded in here this week, Monday, yesterday, and today it's coming down. So are we going to have now a Tuesday close and a Wednesday reversal coming back down? But notice our daily wicks. Today is a higher low, yesterday was a higher low, and Monday to start the week is a higher low, and we are still above 50% of Friday's NFP volume. So if it keeps building these higher lows, we could maybe flip today's bearish candle and continue to trade up in this red zone, okay? So I'll start dissecting that red zone a little more, but get in the habit of stretching this into the future, okay? So I need to know both on Zoom and YouTube, you guys understand the implications of this red zone. I broke it down, okay? But if you're not following what I just did, yes, I can do it over again, but it's not that hard to understand what I just did there, okay? So now what I'm going to do is I'm going to do the same thing for a green zone and how to identify it, okay? Are we okay with this? Thumbs up, hit the like button on YouTube if you understood that, okay? This is where education is powerful. This education can help you be financially free in the near future if you guys are paying attention and listening. If you don't care about this, that's on you. I'm trying my hardest to make you guys understand this. But if you don't get what I just did, I'm more than happy to explain it over again, because for some people it takes a little bit more time to understand this. But with practice and repetition, we can get better and better and better at this. Practice makes perfect, okay? Now, let's just talk about, okay, so for those that maybe I sort of got it, but maybe I need a little refresher. Let's find a bullish zone, a green zone. Prior to it, now it's easy to maybe figure it out after bodies are printed. That's the easy part. But how about identifying a zone prior to it even happening and then waiting for the volume to come to you? So how do we find that? You got to look for flags in the markets or specific areas, okay? So you see how we're trending up on gold, making this higher high, higher low, higher high, higher low, higher high. They kind of pinned it here and then it kind of pivoted right back down. But then you see when it started to come right back up, notice the day again. This is a Friday, a Monday drop, Tuesday, you see Tuesday's that inside candle, and then what do? They reverse it Tuesday, Wednesday. Wednesday it comes right back up, and then Thursday, big strong bullish candle closing above all of the structure. That's where I would identify 50%. That candle is very important. Stretch it into the future, and that's where I would catch that wick over there and continue with that in the future. But see how these are single bar candles. Bullish, bullish, bullish. Now we get a pause in the market, okay? Right there. This is what we call our trap and gap. This is what we look for. This is where you see bullish volume, and then you see the next day comes back down bearish. And then look at the next day how it opens bullish. So right there, and you guys can go back and verify that I'm not making this stuff up. We've done these live videos now for 6 years now. They're all dated with the time and date. You can see what we're doing here. So right there, you know how over here I told you sometimes it takes 2 bodies to identify? Here, there's 3 bodies. You look for barcoding. That's another clue where you can learn how to trap volume, is barcoding, consolidation, flag, whatever you guys want to call it. Do you see that? How it came up? And then you see how I trapped that entire flag in there. That's sometimes all it takes. But the next thing is it a bearish flag, bullish flag? It's obviously a bullish flag because it came in there, it cooled off, caught its breath, and continued with its original momentum, which took us to the all-time high. Now, what is the color of this zone? I just put it neutral to get you guys looking at what I'm boxing in, but it's bullish. Why? Because it's a bullish flag. So what I do is I turn it green, okay? And we did this on these 2 days, on April 11th and April 14th. This is a Friday and a new week opening up on a Monday. Okay, we always at the start of the week do some thorough analysis. Okay, I do a lot also on weekends on my own personal analysis. Okay, we'll do more. I'll invite you guys in on my weekend analysis with me, but I need you guys to like and subscribe to the channel because we'll learn a little bit more on those things. Okay, so what I do is very easy. When you identify it, get in the habit. Don't just identify it and leave it. Stretch it into the future. Then you see from the first top, from the all-time high, where did the sellers naturally come into? Into this green bullish flag. And look now, evidence left behind. What are the results? It came in here all the way down there. The buyers bought it right back up, and look at where it closed. Right above that green box. Where did I get this green box? From that bull flag right over here. Then that next inside day candle, that spin top, kind of just consolidated in there. And then look at where it started. The new week, Monday, started with that big push over the weekend. Okay, where did it come up to? The double top red box. Then it came back down. So this zone still stretched into the future. Now you notice that there was a big bearish candle that closed below it. So when that closed below, that's when I made it red. When a body closes below, I look for it to come back up and retest and maybe get rejected and go back down. But this opened bearish, ignited right away. And it took out the wick and dropped all the way down and came into that block of that bullish candle. I'll talk about that later. And it found the bottom. And look at, again, judge a candle when it closes because it comes all the way back up, and look at it closes back above that zone. So the zone remains the same. The color changes according to the closing volume. When that closed above, it's bullish, so it goes back to a green zone. And again, stretch it into the future. Again, the next day, the sellers brought it right back down, pushed it down, higher low, closed it below the zone. That third body candle, that bearish candle, again, when it closed below, I go red, okay? Because again, I look for a quick little retest and a drop to continue going down. Notice how the candle opened, guys. That's why you got to get really dialed in with your price action analysis. It opened bullish ignited. It did not even come down bearish. So when it's coming up bullish ignited, it's coming up bullish, 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 bullish. It came right through there and then it closed inside that zone again. So you can kind of continue with the green theme. The buyers continue to close it in there, still coming from the bottom. So you could go green again. You know, this is what we call barcoding. This is tough in the markets when it trades like this. It's not trending. It's just accumulating both sides in a range where it's bearish, bullish, bearish, bullish. But then you see that the buyers continue to break it, accumulate more than the sellers, and break it back up there. You can tell by the wicks. Higher low, ignited bullish bottom, higher low, continuing to drive back up. The sellers did break structure, but failed to continue. So the buyers got back in, continued to go up with the trend and took it right back up. Where? To that red zone, and then it came back down. So you notice what I'm doing with that green box. Again, stretching it into the future. Have we traded back in this green box? Stretching it in. Have we traded in here? No. So I got to go into the future now. If we ever do come back down in here, I'm going to be ready. If it comes in here, maybe the buyers will buy it right back out of here. Okay, if the sellers do, again, succeed closing it below there, we make it red, then maybe we're pushing back down to fill that bottom wick and maybe a new lower low, okay? But that's a zone. It's a block in the market. It's already been identified. So let's just continue stretching it into the future, okay? And then also like right here, I just want to show you guys this. So when you see this, okay, please guys, take a snapshot of this. Do what you got to do with this. When you see a significant body candle close above structure, like right here, this is structure. It came up, it pushed back down. It came up, it closed right in there. Came back up, closed back down there. If I was to just box in like this area right there, you can see where you just box it in. I can see I captured majority of the volume inside here. Yes, there was some impulse breakouts, but then it went right back down. So just that zone looking, you see now, this is how I used to practice this stuff. I used to stretch that across and then now see how it was relative to that zone right there. Now, let's just do our Fibonacci rules, okay? So this is how you can figure out not just 50% exactly the psychological middle point, but you can identify a zone by looking a little bit above, a little bit below. The way how I do it is I grab my Fibonacci tool. This is a bullish candle, so it opens at the bottom and closes at the top. Okay, and the reason why I'm doing it on this candle is because this is the significant candle that closed above all of this. This one just engulfed down here. It didn't close above there. This one, in fact, closed above all of this. So this is showing you how strong this daily candle is. Okay, so if we're looking for the zone, if I look for 0.5, there's exactly 0.5. I'll place a yellow line right there. Okay, so now we've figured the exact midpoint. Now, if we want to give ourselves a little breathing room to find the bullish point of control, I go right there, okay? And then I make it green, right? Because it's a bullish point of control. It's not a bearish point of control. It's bullish. That's where buyers are with there. You see, then you can tell the next day it closed right at the high, and then look at the next body that opened, ignited, bullish. Pop the wick and drive. What about all of these patient traders waiting in the market for that pullback to get back in? You see, they missed it and gold took off to the all-time high. They're still pending in here, but they're very patient. So you see, when you stretch that point of control into the future, now what happens when that big bearish candle on Thursday, May 15 comes in here? It comes in very bearish. This is a big bearish candle coming all the way in, but look at what happens. It transacts into that zone and mitigates all of those orders that were pending in the market. And what are the results? You see it come in and the rejection right back out, which started that next move. So you see how you can identify that zone. And it was very similar to those consolidated volume of candles. Does that help, guys? This is kind of like a little bonus. This has nothing to do with what we're talking about today, but this is how to identify a point of control. And once you identify it, if you identified it on this day, April 10, and you just stretched it into the future, on this day, May 15, so almost 1 month later, you could catch a nice, disciplined, patient trade with minimal to zero drawdown, or you could follow that volume. Okay, again, with that zone, I could continue to stretch it into the future. You see how it's nowhere near where we're trading at today, but if this block can't hold up, guess what? That block is in the market, right? Once you are done identifying it, you can remove your Fibonacci, you can get rid of everything, clean up your charts, and continue analyzing. Does that help, guys? Does that make sense? There's 230 viewers on YouTube. If you guys are getting better at this, there should be at least 200 likes on YouTube. I know I'm asking for a lot, but I don't care for the likes so much. I want to just know that over 200 of you, and there's 231 of you that understand what I'm doing here, because it will make more sense when I start scalping and we go down to the 5 minutes, 3 minutes, 1 minute. If you guys want to have those fast learning sessions, marathon sessions, longer, where we're going down the lower time frames, you'll see what I'm doing when I'm dissecting a 5-minute candle and stretching into the future and waiting for 1 minute to come into it. It'll make more sense, you know. So it's good to know, guys. Okay, so I'll leave that just right over there, you know, because we're nowhere near that right now, but what we got to focus on is up here, okay? And then other clues in the markets. Remember what are tweezer bottom lows, tweezer top highs? I talk about it all the time when we're scalping. You know, can we break that when we're in buys? Can we break these tweezer top highs? But you notice here, when that pullback came down, look at where it stopped. It stopped right there. That's why wick analysis is very important, because candlesticks are like footprints. When you walk in the beach, I was on the beach on the weekend, I was walking, and I could see my footprints. My kids could follow me. I was trying to get away from my kids because I wanted to go have a smoke, and my kids were following me because they could see my footprints. I'm like, just leave me alone. I just want to go for a smoke real quick. And they were following me, so I couldn't even have a smoke. So I don't like smoking in front of them, okay? So I got to go hide in a bush and smoke. But they were following my footprints, okay? So very similar to candlesticks. You see how it comes down, it leaves a footprint, the lowest point, and it went right back up. So that's why I draw lines, because when it comes back down to this point, it comes right again to that point. Does it break a little lower? Is it a higher low? Or is it an exact equal low? And in this situation, on that day, May 29, when it dropped, look on this June 30th, almost 1 month later, it came right down equal low, 3,245. Did it transact in this big box? No. Why? Someone asked me, why is that? What is going on? Well, just think logically, guys. It came down and the buyers stepped in right here and said, we're not letting it go down any lower. That's it. That's as low as it's going to go. And then they pushed it right back up. Again, the sellers were strong and they pushed it. How exactly did it come to that exact location? Exact, like we're talking precision. How did it come here and not just break a little bit and transact in this green zone, but same spot? It came and went right back up. Why? Because there's more pending buy orders than there is sell orders at that exact location. Okay, this is where we can talk exactly. And the implications of that is buyers don't want the depth of market to continue to break down. Because once you break that down, even if it's 1 pip, 1 point, 1 tick, if you break that down, that will change up the whole algorithm of the depth of market. More offers can come in above us. These buyers at this block can maybe take out their pending buys and go a little lower for a repositioning themselves for more of a discount buy, or it could start to strengthen this green box here and make this one stronger. But what they're trying to do is make this stronger without even coming into this green zone to create either an equal low or higher lows and continue to push back up and ask to trade up here. Okay, so you can see implications of that. That's what tweezer bottom lows are and how they're protecting this green box. Okay, and now let's start going into a little bit more into Friday and this week. Okay, so Friday was a big day in the markets. It was NFP. Remember, bad job report numbers, even they revised them and they were horrible numbers. Okay, we can debate why they were revised, what's going on, this and that, but that's for another day. What we got to look at is now just price action. So this is the results of Friday's NFP. Whether you like the job numbers or don't like the job, I don't care about that. I care about this volume. This is what I'm looking at now. So this is a pretty big, significant candle. Can we identify 50%? Can we get our point of control of this zone? So let's do this. Let's do it together. Grab your Fibonacci tool from when Friday opened and Friday closed. Okay, you see there how I can concentrate exactly right in my bullish point of control. There's 50%. Exactly. Yellow line, 3,325. Notice again, we're trading in an auction. Okay, so auction theory. Some of you guys are as old as me and you guys understand auction theory. Okay, if you don't know what auction theory is, go this weekend, take your kids to a car auction in your town. It's fun. You'll see that guy talking, blah, 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 sold, and the numbers where you're going to see transactions are whole psychological numbers. Why? Because it's easier to transact. Okay, so look at that: 3,325, 350, 375. 400, 425, 450, 475, 500. I could keep going all day, all night. And in the bigger, if you're on higher time frames, you should be focusing not on the quarters, but more maybe the 50 points. So you would be focusing more on 350, 400, 450, 500, 550, 600. If you're more of a higher time frame trader and you're looking for bigger moves, maybe don't focus on the quarter points or the half points. You look at the 100 points. So you would be looking at 300, 400, 500, 600, 700, okay? So everyone has their own psychological points, okay? Depending on what type of trader you are. Now, identifying that bullish zone. It's right there, okay? You know, it's right there, that point of control. You know, when you got those pullback buyers, you know, when I say, guys, let's wait patiently for a come back in here, maybe we get a pullback buy, you can see that there was those buyers waiting on NFP to get back in, but it came down and that's the lowest point and it went back up. It came down again this week and it's a higher low and went right back up. Now we're coming back down. Today's low is a higher low. So you see, we still have not transacted in this zone as of yet. So this is a bullish block in the market below us that's still sitting there that has not been transacted. Will it come in some point this week? I don't know. Maybe next week. Right now, it's making a higher low, a higher low, a higher low. They're ascending away. They're diverging away from this zone right here. Okay. So all I can do is identify it. You see, there it is. We identified it on Friday and stretch it into the future. That's, you see, guys, how we can identify a point. And when it gets in here, I don't know when, but maybe it could bounce out of here and continue to go back up. Maybe the sellers are strong. Maybe it just initially bounces and then they continue push it through here and close it below there. If that's the case, then what I do is I don't change the size of the zone. I just change the color. I invert it. Okay, some of you guys do inversion rules, inverted gaps, inverted fair value zones, whatever the hell you guys call them. It doesn't matter what you call them. Okay, just understand the technicals behind it. The volume closes below, you invert it. Now what we look for are, again, there's going to be buyers because they're getting discount. They're going to buy it right back up. But now this might be a bigger zone of offers. And now it could change the depth of market and turn red, where sellers are now offering more than there is demand for this security. And then maybe it comes in there, it gets rejected, lower high, and then sellers have full control. And then they're coming to take out these lows and maybe trade back down to that equal low yellow line or in the green zone. Okay, so does that make sense, guys? But that is a particular block in the market that could dictate if we come in there and go back up, or if it kind of breaks down. We could also consolidate in here. It could come in here for a few days and just consolidate and accumulate. And then again, we wait for a move going back up or a move going back down. And you also have to be vigilant and watch for fake outs too. Okay, so you got to watch for fake outs. Sometimes the market loves to fake you out. You go in a sell on an impulse, then it catches a wick, comes back up, then all of a sudden it's coming for your stop loss up here, and you're scratching your head saying, why did I go in on impulse? So that's where you got to ask yourself, are you waiting for impulse or are you waiting for bodies to close? In my opinion, it's always best practice to wait for bodies to close. If you go in impulse, yes, I understand. I trade impulse candles too. Sometimes there's an intuition you have, the way how they're building, clues prior to it going on impulse. And when you go in, again, you got to use proper risk management rules. Okay, so we'll talk about that on another call. But you guys good at identifying this zone, stretching it across into the future? Now we've got a couple blocks in the market for us, okay? Let's now continue because we're losing time here. It's almost 8 a.m. Okay, so now I got to start really cooking here. Okay, so we're going to start breaking down these daily candles, go 4 hour, hourly, and then into 5 minutes. Okay, now what is the overall daily trend? Okay, we came off of last week, like a lot of selling pressure where gold on the daily was making lower lows, lower highs, lower lows, lower highs, continue. Finally kind of bottomed out here at another point of interest. Okay, look at this point of interest. Like, how can we deny this point of interest? Right here, there was a body close, a body open. Look again, when it came over here at another time, body close, body open. So 3,273, around that 75 area, is holding good, strong support, making higher lows from here and here. So buyers are asking to trade higher and they're protecting the lows. Okay, so that's what creates a depth of market and a ascending motion back up. We come up on Friday, big reversal. Friday, NFP closed above, start to reverse this. We're still technically on a monthly or weekly, still bearish. Okay, because this is a lower high from where we're trading right now. That's a lower high and our all-time high. Okay, so if you just draw like a trend line, you can still see we are descending down, but we're building our way back up. We're in a pennant right now where buyers are buying, sellers are selling. Eventually, it might squeeze out of here and continue to drive up there, or sellers are going to push it back down. Now what I do is, inside this red zone, there's two things you can do here. Okay, so please pay attention. This is going to be for you to decide what works best for you. You could either go and pick exactly 50% of this red zone. Remember, the red zone was a particular size we picked because of these two candles over here. You could go exactly and figure out where's 50% of this zone and just draw a marker line, okay? You could go right exactly at 50%. This is option one. I'm giving you guys some options now, and you guys decide what works best for you or what you understand best. Okay, very simple. If I just identify 50% of that red block above us, right there, that's the psychological midpoint. I look at the price tag, 3,401. So I'm right near my psychological number of 3,400, give or take $1 or $2 here and there, okay? That's like 10 pips, 20 pips, 15 pips, whatever. Okay, it's kind of like a spread. So, but pretty accurate. Or what you can do is this big bearish engulfing candle inside that big red block that engulfed that bar, you could figure out the point of control or 50% of that bar. If I was to do that, okay, let me just show you how. Option 2, you go from the opening of that bearish bar to the closing price of it. And then I can see exactly 50% of that bearish bar that naturally started this downtrend. It all started with this bar right here. So if I'm picking the point of control or just 50%, you see now how my yellow line is not that 3401, it's at 3409, okay? So these are the two options. You pick what works best for you, okay? So right there, that's exactly 50% of the zone, or if I'm going with this candle, okay? What you could also do, okay? So let me blow your minds now. Option 3, you get your Fibonacci tool. In that red block, you go from the entire distance, right? So there's the 50%, and now you get your point of control, right? Look at the point of control now. So it's going to be a red zone within a red zone, okay? And you're going to say, this guy's crazy. I know he smokes a lot of weed, but why does he have a red zone inside a red zone? What kind of shit's this guy smoking lately? Okay, so you see that now. This is what I do, guys, on weekends. You know, I'm just staring at the charts and I'm playing around, and this makes me money because I get ready for what's coming. You guys, now, this is what I'm saying to you guys. You guys have option 1, option 2, or option 3. So you see now, I get my point of control, and if I just kind of manipulate it myself, there, I get everything. And then I can erase this, and I'm ready. I got a point of interest at 3401. I've got a point of interest at 3409. And then I got my red block. So this strengthens my decision that there's a lot of sellers in here. So if gold naturally comes back up, maybe this week or next week, in somewhere in this red block, what do you think are going to be the results? I'm saying that the sellers are going to continue to protect the all-time highs, maybe create a lower high in here and push it back down. Unless the buyers prove to me that they can break it out of this block, close it above there, then that block will go green. And maybe the buyers are now doing this, and then we're breaking through here and then possibly going to a new all-time high. Does that make sense, guys? Okay. So I know that today is starting off as an education session, and you're probably wondering why are we not trading right now? But also, education is powerful. Knowledge is power, okay? Does that help, guys? So you figure out what option works best for you, okay? Now, let's just dissect what we got going on. Yesterday's volume, okay? So yesterday we opened, was initially bearish where it came down here, but we picked up a higher low. We're still above Friday NFP's point of control, still bullish. Higher low, it came all the way back up. You guys remember we were in that buy when it flipped. We bought the lowest point. We bought down here. We bought the lowest point of yesterday's daily candle, and we caught that huge move as the daily candle flipped, and it not just flipped, it came back to the opening price, flipped bullish, but took out Monday's high. So we created a new weekly high, okay? And how high did we get up to? Let's just place a yellow line. We got up to 3390, just below 3400. So that technically is a lower high, okay? Technically speaking. Got rejected, and it closed with some good bullish volume. So it's a bullish pin bar candle. Now, let's look at where we closed yesterday relative to where we opened today. Is there any gaps in the market? I always look at this. When we close, did we open? We closed, we opened. Clean transition, 3380. See the psychological numbers? 3380, 3390, 3400, 3410. I could go up one more notch. I could go 3420 without even looking at anything, okay? And then when we get 420, you smoke something when you get up there, okay? Now, we opened, was it bullish or bearish when we opened? It was obviously bullish. Why? Because it opened and it's got a tail shadow wick above us. We can identify that now. It leaves a footprint behind. Okay, so that's we came up today bullish. Purple line, that's what I do for my high of the day. 3385, 3385. I can see it's lower than yesterday, and look, it's equal with Monday's high. Okay, so there was a little bit of an impulse breakout yesterday, but it came back down. It came back up to retest. We didn't retest yesterday's volume or make a new higher high. It's a lower high, and now sellers are pushing it down inside the red zone. So what are now the results of it? They're pushing it back down to where we opened. You see how strong the selling pressure is, coming down, coming down, coming down. Here's a point of interest. A body closed on Monday and the open on Tuesday. So I'm just placing a yellow line right there. This might become resistance. It is resistance right now. And we'll see if we revisit this today. So that area is 3373, around 3375, okay? Give or take 15, 20 points. And continue to come down. Bearish, bearish, bearish. But remember, yesterday was a long wick, okay? So the longer the wick, the more exhaustion. The sellers have to fill all the way down that wick and then continue filling that one in order to make a new lower low. So this is why when it came down today, it came all the way down, but the buyers are there protecting it at 3357, 3358. That's where it made our low of the day. So there's our purple line currently right now. Okay, so far it made its lowest point of the day at 358, and now its buyers are pushing it right back up. We still have a lot of bearish volume that could easily absorb these buyers and come all the way back down to the lowest point and drop. If we come back down to the lowest point and we drop, where are we going? We have to test yesterday's volume. It's fresh in the market. That's the fresh low right there. Look at the psychological number, 3,349 and 75 cents. So just under 3,350. We got to identify that, okay? And then if they come down there, it could either be a kind of a higher low, equal low, or they break for a new lower low. If they break, then that right there, it's Monday. It's our weekly low. It's a very important candle, okay? Will the buyers continue to hold their entire week's progress right here at 3,345? If they don't, if this doesn't hold, we lose our weekly support. Then sellers are in full control of this week and has a high probability we're going to trade into NFP's point of control, where all of these patient buyers are waiting to get back in. But that volume might be coming down real bearish and could cut right through here, depending how we transact in there. But that's like the steps of the process, what we got to go through, okay? So far right now, we have not came down here. So right now, we don't have to worry about these. What we got to do now is watch how it got its low of the day, coming up with a higher low. Where will it go up? Will it flip this entire bearish volume? Will we flip the candle how we did yesterday and turn again bullish and start to drive back up here? Or is this volume going to continue to hold? If we come back up to this yellow line, 3373, it might be resistance. And then again, they push it back down. But here, there's another point of interest, a body and a body. So let's just place one more yellow line right there. And we have to watch this area 3362 because it could come back down and we'll see if it can hold this yellow line and build off of this. Okay, so far, we're seeing a bearish candle, but it could also consolidate now. Like look, neckline. What if this was a 5-minute setup? What I normally do is like here, where we see a couple bodies, 2, 3 bodies right there. Look at that consolidation. Like remember what I always say, guys, if we trap some volume, like I'm just going to make it neutral so we can watch, stretch it into the future. What do we see here? I see a neckline. I see a big move coming down right there. It stopped, pivoted back up. There's the recovery coming back up. And now we're at the neckline. So it could trade in here for a couple bars. These are daily bars. So you could get a couple days this week of consolidation in here. And either it'll continue to break, maybe a bull flag, continue to come up here and test this red block, or it's going to be the neckline. This is going to hold, and then we're dropping right back down in here. And when it comes down here, we'll test this block, see if it holds. If it doesn't, maybe a double bottom and then a bigger move coming through there, okay? But you have to test this zone before you can come down for a double bottom. This would be a higher low support. Continue to move with the bullish move and maybe come through here, okay? So right now, we're kind of consolidating. Bullish volume, bearish volume. This bar today has taken out both of our early Monday, Tuesday buying volume, and we could be coming down, pushing down, but we haven't filled those wicks yet. So this is where it could get a little choppy trading inside here, okay? Now, what I do is I break down this daily candle. I go into either the 4-hour or the hourly. Look at the 4-hour. It's got a M top, okay? Ready to break structure today. But right now it's holding. What do I mean by that? Consider this whole top up here as one top, right up to that purple line, coming back down, There's our neckline. I see that they broke it, okay? So they peeked their head down there, but the results were we closed with volume right here. It came back up. There's the liquidity grab. It broke it that high, but look at more towards the purple line, double top with the liquidity grab on the 4 hour. Now we're coming back down. Look at this nice big 4 hour candle coming from Europe. This was 2 a.m., 3 a.m., 4 a.m., 5 a.m., and we got a new one opening up right now, 6 a.m. That was a big 4 hour candle push down, but as we came back up, look at where it came into. 50% of that bearish candle, and they are pushing it down. If we lose this bullish volume, look at what we can do today. Gold could be bearish, breaking the lowest point of the day, the purple line, fill Tuesday's wick, and maybe continue to drop down into here. And could be bearish, but look at it, guys. You can see it's a 4 hour M top, double top, and here's our support we're trying to break, the lowest point of the day. Notice now, okay, so let's just look at this big aggressive 4 hour candle that came down. Can we find our point of control of this 4 hour candle? If we're moving with the volume, we're moving from the daily, 4 hour, hourly, down to lower time frames. Let's pinpoint exactly 50% of this 4 hour candle that already closed. There it is. There's 50%, okay? I could also find a bearish point of control of that 4 hour candle right there. And I can see that we've already transacted in it and we're getting rejected out of it. Now what I do is when I identify it, I stretch it into the future for the remaining part of today and maybe tomorrow. So you see, guys, do you see what I just explained? M top, come up, back down. Neckline, come up. Liquidity grab, they broke it. Volume right there. This is the second leg coming down. We couldn't close below there. Now it's coming back up. This 4 hour candle is going to close in less than 2 hours by 10 a.m. It's coming right in there. Still, sellers are there. They're rejecting back out. But now we still have this bullish candle still pushing up. So is it going to come up here, break above, or are we going to lose this volume and we're breaking that low of the day and we could look for sells? Now we're at the 4 hour. Okay, I don't have time to sit and wait for an hour and 53 minutes for this candle to close. So I go to the hourly now. Okay, now I can see more specifically. We have an hourly candle closing in 53 minutes. I can see how it slowly came down on the 1 hours. Okay, lower lows, lower highs, lower lows, coming back up. That's that 4 hour block. We came in there at 5 a.m., rejected back down. We came in there again at 6 a.m. They rejected it with some bullish volume. See how it's still holding 50% of this bullish bar? I can see the retracement come in, come back up, could not make a new higher high, lower high, closing right in there as an indecision spin top. This hourly candle just opened up. It's bearish, coming down, but with higher low, higher low. So we're going to see, like right now, we're going to get a lot of fighting between buyers and sellers going into COMEX. But if we look at the overall hourly, again, we're making coming up higher high, higher low, higher high. That technically is a higher low from NFP. Continue to make that new higher high, coming all the way back down to this lowest point of the day. Tweezer bottom lows down there on the hourly, but it is a higher low still moving back up, okay? So if you just kind of want to look at an hourly trend right now, this is our hourly trend that's still holding. I'm going to do a white line on hourly. And then that's what I'm watching today. I want to see today, will the hourly volume, 30-minute, 15-minute volume, break that trend line, close below that purple low of the day, maybe come back to retest it, and it gets rejected. Then they fill down there, and then we really start dropping down, okay? Today could be a potential selling day of gold. The way how it's coming down on the daily, hourly, lower lows, lower highs, lower lows, lower highs, lower low. This could be another lower high and dropping, okay? Could be just that little counter pullback and elevator coming down very soon, okay? It's coming down right now. So I can go into the 15 minutes. I could do the same shit on the 15 minutes, watch it. I like to go in the 5 minutes more specifically. And this is what we got going on the 5 minutes. Look how nice and clean they're trading. Come up nicely, push down. Come up nicely, push back down. Consolidate in that block, push back down, bear flag, come back up, neckline, come higher low, it's building, it's building, it's building. But on the 5 minutes, if we can cut right through here, like if we can start to close above here, maybe we'll have a nice little breakout up to here. And then when we get up there, it could be resistance and go back down unless we can continue, maybe close, push, and get slowly go with each line, okay? We're 10 minutes out of COMEX, okay? So I'm just going to bring this together now with our daily bar indicator so we don't forget how the daily bar is trading. So you guys remember we opened right here at 33.80. We can go back and look at 6 p.m. when we opened up. right over. Opening price is right here, 1800. Right there. Okay, there was our opening price. We had a little bit of a push, which created our high of the day right there. These are top highs at the high of the day. That was when the futures market opened up just after 8 p.m., 8:30. And what were the results since then? Futures market opened up, push gold down, lower lows, lower highs, lower low, lower high, lower low. Again, lower high, below the opening price. So they're protecting the opening price, the bears, the sellers, and continue pushing it down. Coming back up, lower highs, breaking lower lows. We just hit the low of the day right there, a couple wicks at 5:50 and 6 a.m. Eastern, new hourly candle. Slowly it's coming up right now, but we still have a lot of this bearish volume, okay? So we're going to go next 10 minutes into COMEX, and then we're going to see the results. We don't have any high impact red folder news today, so just watching the volume today. And adding EMAs. Now you can complement your chart with like an EMA 9. This is my 9 EMA green line. We're below it on the lower time frames on the 5 minutes. And my EMA 200 is all the way up here. So we're below it. So it's bearish on the daily. It's bearish on the 4 hour. It's bearish on the hourly. It's bearish on the 5 minutes. Building a little bit of a wick on the bottom. Okay. We're below the 200. We're below the 9 EMA. If we're buying, we're counter trading. So the best to do in this situation is maybe continue selling or wait for premium sells at discount premium areas. We sell this in this red box. We sell this yellow line. We could scalp our way back up, but we have to understand we're counter buying if we go back up. Okay. So does that make sense, guys? Under pressure, it's so confusing for you with all the yellow lines. Not in the moment you explain it, but I promise I will be so confused tomorrow when I look at the chart. I don't know how it's confusing to you. Like, I honestly don't know how, after I just spent 1 hour breaking this down, these yellow lines are from the daily. They're just, when you go to the daily chart, you look at points of interest. They're basically where bodies close and where they open, and 50% of bodies. I don't know how that doesn't make sense to you. It doesn't make sense to me that you don't get this. Like, but I'll continue not getting frustrated and continuing to do this on a daily basis. And hopefully after some practice, you'll start to understand what I'm looking for. I know it might take time. I know a lot of traders get confused, but it should. I'm not doing it to confuse you, believe me. But I understand. There's a lot of different lines and colors and things like that. But remember, I color code my lines. So I know this purple line is a daily low. Okay. I know that this yellow line is a daily point of interest. I know that this one is a daily point of interest and it's in a red block. I know that this one is another daily point of interest and it's just right above the 200 EMA. So it's still strengthening my selling pressure. I know that this yellow line is the opening price of today. Okay. So right now we're continuing moving down bear. So look at what the 5-minute candles did. They traded right into the point of interest on the daily in a red zone. So it's going down. That doesn't surprise me. Okay, so it's up to you guys. If you guys want to take a trade prior to COMEX or you wait for COMEX market open, see how it moves, then maybe you continue trading at 8:30. Again, I always look at the news. 8:30 normally, typically during New York sessions has a lot of 8:30 red folder or medium impact US news. This morning, we do not have anything, okay? So we can just continue focusing on the volume. Let's see our Discord if anything came out here. Okay, so look, shorting below 3365 for gold. Okay, so we're right there. 3365 is right below that block. If you guys are in our Discord cells right now with the trade signals, 3365, right there. You guys should be running approximately maybe 40 to 50 pips right now, okay? But see where we kind of pinpointed that point of interest right there? Like I can show you guys. Here it is, how it was released to the group. Right here, okay? So you can see that 3365, that point of interest. I showed you now with a top-down analysis how we came down. This is on the 15 minutes, but push down, retest, and continue dropping. Selling pressure, we went through it on the daily, on the 4-hour, on the hourly, and then back down to the 5 minutes. Okay, so that's why if it comes back up there, if it comes back up again, I could be looking to maybe sell a second top. But I got to wait patiently for it, okay? It's either you got to sell the bottom now, but look at where the smart sellers are selling up here. They're selling at a premium area, right? Sell high, and then you buy your position back low. That's how you make money, right? When you're a buyer, you're trying to buy low and then sell it high, okay? That's how you make money. In this situation, we're dropping down. Now look at, we're below that daily point of interest. So if it comes back up for a bullish retest, that could continue to be bearish. Your 9 EMA might be coming there. 50% point of control of this bearish candle could continue to push this move down, okay? Yeah, Dave's making some magic. He's reporting his earnings in that today. So we'll see. Dave will give us forward guidance. Okay, guys, we got 323 viewers. Let's all right now take 1 minute, not even a minute, 1 second, hit the likes, subscribe to the channel, hit the notifications. Wow, we got another giveaway today. So if we get to 82,000 subs, which we're not too far away, we will give away our SST Daily Bar Indicator, this one right here. And it also has an attached Fibonacci retracement tool, which is pretty cool. I don't have it on here, but if you go to the settings on the Daily Bar Indicator, you can see when you scroll down, you have your Fibonacci levels. Your 0, 236, 382, 05, 618, 786, 1, and all your negatives and positives above or below. If you want to highlight one of these, you could have it trailing behind. Like for example, if I want to put the 0.5, you're gonna see an orange line. There it is. So this 0.5 is telling me 50% of the entire range of today's bearish candle. So when the highest point and the lowest point, it's telling me right now, there's that orange line. I can see it right there. 3371 is exactly 50% of today's range. So if it comes back up there, like if it breaks through this red zone, maybe there's the 200 EMA and 0.5. That's where I could be selling at a nice premium and then sell that move back down, right? To go down with that point of control volume, okay? So you could also add that on your charts as well, okay? You could have the whole Fibonacci retracements following you, but it's a lot of lines. I don't place it on here because it's going to be a lot of lines and confuse a lot of us, okay? Okay, so we're about 2.5 minutes away from COMEX market open. Again, we're trading near the lowest point of the day. So we're going to see, will they break the lowest point of the day? Will it come back up? Will we close below there? Are we going to get a further push down? Or are buyers going to continue to protect this lowest point of the day and bring it back up? We could reverse a little bit of this candle. I'm not saying we could flip it entirely bullish, but we could still maybe trade back through here, like maybe catch a retracement. And just one other thing to mention, please guys, if you're going to get ready to trade in COMEX, take a look at your spreads. That's what I do. So I got a spread of 1.1 right now on gold. So it's a little higher than I normally have. Normally it's about 0.5. So I can tell it's getting a little higher with the volatility because we have COMEX market opening up. Make sure guys, you check your contract sizing, lot sizing. You don't have the wrong size in, so you screw up if you buy or sell. Just these are those common mistakes some traders make, mental errors. I make them all the time. That's why I always double check to make sure if I'm flip-flopping, if I was trading US 30 and I move to gold, my broker has completely different lot sizing, contract sizing. So I got to switch it up so I don't make any mistakes, as you should be too. So take a look at your spreads. Because we're going to have COMEX market opening up in 1 minute. So let's all get ready, guys. Okay, so it came down. This is technically a higher low from here. It's building a little bit. See how it's trading right back up to that yellow daily point of interest. Okay, so that's what we got to watch for. Is bullish volume going to close above it, continue to drive up? If it does, we're driving back in this red zone again. You can see that there's a lot of sellers here that when it was trading consolidating here, they pushed it down. It came in there again and they pushed it down. Okay, so it could come in there again and they push it down with a lower high. Right now, you see how it traded right exactly to that yellow daily point of interest, and it's got a rejection wick coming down into the close in 20 seconds, guys. Okay. Guys, it would be amazing if we get 500 viewers on today's call as we move into Wall Street. That would be something special. That would really get me pumped up here at SST. That would be huge, guys. Okay, so let's go here. Here's the close, very bullish. So opened, ignited, and pushing. Okay, so it's a nice, strong open. It's bullish, ignited, open. See how it closed right at the high? There's no wick. So it just opened and popped like a firecracker, just moving up. Okay, so this is the exchange open following that 5-minute candle, coming up real nice and bullish. Now, let's see when it transacts into this red zone up here, what will happen? Okay, it came up there, lower high. It's kind of equal with that 5-minute wick right here. Okay, so I'm just going to start zooming in a little bit. Wrong line here. Sorry, 1 second. Right there. Okay, see how that's a equal tweezer top high. Okay, from that previous, and look at 50% kind of that bar, that wick, it opened, ignited, pumped right up to there. They equal tweezer top highs and they rejected it back down. Okay, so now we might get some barcoding volume, black, blue, black. We might be transacting into 50% of that previous bullish candle that created that strong open. So let's see right now if it can hold here or sellers are going to bring it back down. This could be that kind of consolidated volume where it kind of barcodes in here, where you can kind of trap this volume right now. Okay, you don't have to trade right away. You can continue to watch. Okay, but there's an example of tweezer top highs or equal highs. Is it just by chance that they stopped it exactly from creating just a little bit higher high? No, this is all by design, okay? And now we got some indecision, okay? Came up there, guys, equal highs, bearish, below the red block, so they're protecting the red block, coming back down, but you see now how we're trading in 50% of that bullish candle, like into the point of control of that candle. Will the sellers continue to come all the way down here, maybe close below here, then we'll get that next leg coming down, or are buyers going to continue to accumulate? This is like a spin top candle with some indecision. We still have 2.5 more minutes to go on it, but again, if you're not trading right away at the market open, we could continue to wait for something to develop. Any questions? Trevor, is that an algo? Just how the depth of market works. The market could be positioning more offers than there is pending buy orders. Okay, so there could be more limit sells, more sell stops. Just protecting the market from breaking. That's the delta, probably negative delta when they transact up there, telling me that there's more sellers than there is buyers. But if you don't have access to that depth of market data, you can tell by the equal high wicks. Okay, candlestick analysis I love it. Okay, I love candlestick analysis. Tells you a lot right there. That showed me a lot. Left a footprint behind, showing me sellers are strong there. Exactly at 3364.15. Will the buyers continue to come up and break that? Possibly, but right now it's a spin top. We got buyers buying, sellers selling. Indecision candle. These are not the greatest candles to be trading. We got to wait for a little bit more confirmation. What I look for confirmation, will it close above the yellow line or below the yellow line? Okay, so far buyers are still strong, coming back up. See, it didn't break that bullish point of control. Now we're coming back up. So let's see another attempt to break that equal high. Will they come up there and break it, or Is it going to be protected? And again, they're going to push it down. So going into less than 1 minute, let's watch this. It's interesting. So we're coming all the way right back up there. Will they technically break it out? Or, okay, so we're right there at it there, okay? So they did push it up going into the close. So they did technically break that. So the buyers are initially strong here. Sellers did pin it and push it down, but you see how it kind of held right at 50%, a little bit above, a little bit below. Again, I didn't do my zone in there. I just did 50%. So they're holding it strong, coming back up. Now let's watch the close of this candle. Is it going to close in this red zone? Okay, we might get a little bullish move, maybe cutting through here. Okay, so far we got kind of buyers holding this. That's why I just made this zone green. I can see it come down, back up, come down, double bottom, go back up. Came right in here again, go. So if we pull back now to about 50% of that bullish candle, if you're waiting for a pullback, maybe 50% or back down to the green box. 50% pullback is right at that 9 EMA. So it might come down bearish down in there and then get a wick and go back up. It might miss even coming down here. It might not pull back because buyers might be asking to trade right now up in here. So yes, it could continue to go up, or if you're waiting for a pullback, you got to wait patiently for a pullback, but you might miss out on a bullish candle printing here. Okay, so you have to ask yourself, do you want to jump in right now, or are you waiting for that pullback? Sometimes it sucks waiting for that pullback and you're watching a candle close right at the high with a small pullback and it's ready to fly. It's kind of like those candles that are popping and continue to drive. But if you got rules and you got discipline, I would recommend that you stick to your discipline and your rules. Okay. Anytime you kind of cheat your rules, you could get caught in a buy and then you see how it could be possibly coming down, so you got to understand that it is a doji candle. It's still consolidating here. That little push down where it came, that's it. And then buyers are asking. So you might have to make a decision to go in a buy or continue waiting. Okay. You got to kind of feel it out. See the way how it's moving. We're going into 8:30 in the next 3.5 minutes too. So we got a new 30-minute candle opening, which could change up everything. Okay. So it's up to you. I'm trying to wait for a possible pullback because we are trading like right back into that red zone, right to that yellow line. So even if I was to go on a buy now, even if it comes right up there, it could get rejected and come back down. So to me, I don't think the risk to reward is good to buy this candle right now. I'm not in this one. I'm not in that one. That's where the better buying is. But like, for example, if you just buy right now and it just goes up to that yellow line, you're up 10, 12, 14 pips. Are you going to do anything? Because it might just come up there and get rejected and come back down, okay? Unless it breaks right through there, okay? To me, I still think sellers are strong. So I would rather wait for a pullback, a discount, get back in, get more buyers, and then come up stronger, okay? Because it might just come up a little bit and then go back down, okay? That's just me analyzing it, guys. I'm sorry. It's a live environment, okay? It's easy to say after the fact, we should have done this, we could have done that. That's up to you. If you want to test out a buy, go in, test it out. I'm waiting down here. I'm waiting here. And sometimes, yes, you got to learn. You're waiting for a pullback and you're going to miss out on a move. That's why discipline in trading is so difficult. So, you can't teach it. And then you can also look at the 30-minute candle too while you're waiting. Look at the 30-minute candles. Wow, okay. So they traded in that green zone at the lowest point of the day, back up. Traded back in here, came up into here. Came all the way down, back down in there. And now look at this 30-minute candle. Might close strong bullish. And then maybe we could be breaking out in the next little bit, okay? So that's important to understand too. I'm just going to watch how this closes in the next 90 seconds. Okay, we got 60 more seconds to go. Okay, now it's a bearish candle that got rejected in there. Lower high, shooting star candle coming down. Let's see how and where it will close. Okay, I have 50% of that bullish candle mark there. There's that 9 EMA. Will it come all the way back down there? Will it come back up? Okay, so it's spin top, indecision. Will it close below that red zone? Will we get the next selling leg coming back down? If you're looking to possibly buy a pullback, maybe it will come down to us. 8:30 will bring in more volume. It's a 30-minute candle. Normally we have North American news. This morning we have no news at 8:30. So just maybe continue trading off of COMEX with no major volatility unless something is said on our financial juice over here to the left. Okay, so here's the close. Okay, so it closed as a bearish pin bar. So it could definitely, with that selling pressure, push down. But notice how it opened ignited bullish, briefly ignited bullish. Okay, it's got a little bit of a small wick. So now it needs to backfill that big wick. Okay, it's not a short wick. So buyers are buying. They're asking to trade up here. They would need to fill that entire wick in order to create a new higher high. So it's got long distance to get up there. It might get exhausted. So as the buyers are asking to trade up there, sellers could come in and just push this thing right back down, right? Okay, so there's the push down. There's the rejection. Okay, and now here's the move, possibly going to take out the low and maybe come push all the way down. So if you're looking for a retest or a dip buy, this could be your opportunity here. Okay, let's see when it reacts at around 50% at this red line. Will it come in here and catch a wick, or will it break and even go down further? Okay, so there's that where you wanted to buy the high. Now look at the discount you could be buying here if you're looking for a buy. Now it's coming all the way back down into the green zone. Okay, I'm going to buy now. I'm going to buy out of this. It came into that green zone. I'm going to buy. I'm going to kind of place my stop loss. I want to place my stop below this low. So I'm buying that pullback. Okay, I want to show you what a pullback buy is. Okay, so I got it on discount. I could have bought that highest point, but I bought in the green zone. Yes, I could possibly get stopped out if this is really, really strong selling pressure, but it's an example of buying a pullback. Okay, I didn't wait for the body to close. I bought it as it was coming down. Okay, so let's see what's going to happen with this. And I could get stopped out. Then if I get stopped out, then I'm going to show you how strong this selling pressure is, that it could continue to take out today's low of the day and continue dropping down. So let's see now if there is any strength in this green zone, or is it just like a false zone? And we're going to continue to push down with this. Okay. So just a lesson to you out there. If you wanted to buy up there, you know, that's how you can patiently wait till 8:30, maybe catch a discounted buy. That is a discounted buy, because, you know, where you're humming and hawing buying up there, if you bought down here, you're getting about a 25, 30 pip discount, right? Okay, so I'm in the profit now, but, you know, we're looking for it to maybe push back up to, there would be 20 pips just to fill back up to where it kind of started. And then if it can break out, we're looking about 25, maybe break that high, about 30 pips coming back up. If it can get up to that yellow daily line, we're looking about maybe 35, 40 pips up there. Okay, so that's how you can buy a pullback. Okay, you see when it came all the way down, bearish, 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 it kind of caught that wick when it was going back up. It's in profit, 10, 15 pips if you like quick little scalp entry. But there it is. Maybe the candle will flip bullish. It just flipped bullish into a pin bar. If we can close back above here, maybe turn it into a hammer, we're driving. But that's a dip buy on a pullback. Just, guys, live education, you know, like I could have said after the fact, we could have done this, we could have done that. But again, it's live. So that's what I was saying. Guys, I don't feel comfortable buying up there. I want to wait for the pullback. The pullback came to me, so I pulled the trigger. And I'm in profit right now. Okay, now I gotta maybe wait to see if this body can close back bullish in this red zone. Maybe we can push this up. If you look at the 30-minute candle, again, it came all the way down there. You saw the opening, and kind of maybe it could reject back up and go in here, but it's still bearish. Okay, it could close below this red block and come all the way right back down. I don't want to go to a break even just yet because I still have the green zone. If it wants to come back in, let's see where it will close. Okay, so sellers are still strong. See how they're coming down back all the way down. Okay, so it's a tough candle, right? You got buyers buying, you can obviously see that, and you got sellers selling. This is just a small scalp, right? Just to show like a pullback scalp. You know, I still understand that there's a lot of selling pressure up here. That's why I'm just kind of seeing if it can break this high, and then I'm going to escape out of this trade. Just example of a dip buy. No, I understand. Discord has a sell. I'm just showing a dip buy, guys. Maybe I got to clarify all of this. Okay, so there's the close right again at that red line, at that bullish point of control. So anyone can take it now. Now it's opening bearish, coming back down. Okay, so I got to see if it will pick up a higher low wick. Otherwise, sellers will come back down into this green box. What I could do is lower my risk now. Okay, so I'm going to bring my stop loss right there, because if this is selling pressure, it could cut right through here. And we're in a Discord sell. So that was an example of a dip buy. You know, I unfortunately didn't do anything at 20 pips. Sometimes when I'm training like this, yeah, I'll take hits, I'll take losses. That's scalping, guys. Okay, so that's coming from a scalper's mindset, looking for quick 20 pips. I should have, when it came up there, should have just closed that trade, grab my money and get out. Now I just brought my stop loss right here. If I can still hold in here, we'll see if it can rotate back up. Otherwise, I'm going to get stopped out, and I'm going to take a hit of 10 pips. Okay, I'm okay with losing 10 pips. Okay, there, I got stopped out. Okay, so I lost 10 pips. That was a live example of, if you're humming and hawing about buying the high, that's how you can get a dip pullback, go up 20 pips and do something. Okay, but we got the Discord sell, and I don't want to go against that. Okay, so that was a live example, guys. I just lost 10 pips. That's okay. I'm good with that. I'll recover that. And you can see how the selling pressure is still pushing down. Okay, so let's watch this bearish volume. If it starts close below this block, this could really, really break down, and we could be attempting to break the lowest point of the day. Sorry, guys. Yeah, red. I got sniping in my blood. Okay, I'm a full-blooded sniper. That's what I look for when I'm sniping. How it came down there, you buy that wick, it rotated right back up for 25 pips. I didn't do anything, okay, because I was waiting for it to close above and break up. But you see how I was counter trading. But you can counter trade as a scalper, but you got to know exactly what you're looking for. Okay, so lessons, guys. There's a lot of lessons we can learn from. Okay, but there's still trending down. Let's see if this bearish candle will engulf all of this. We could be breaking our low of the day and really, really dropping today. Emmanuel, you made $240 on the quick scalp. Yeah, you got to be quick. You got to be quick with it. Okay, but we're still transacting in this green zone. So like our Discord sell, we got to get some bearish volume closing below this green zone so that we can make this block red. We got our big one above us, but we got to make this one. We got to invert this one so we can break the low of the day. You got to understand that they are protecting the lowest point of the day. Okay, they are protecting it from breaking down currently, and then it's coming right back up again. There was no news today, so we're just continuing to trade right off of COMEX, following the technicals. No real big high impact news to really cause some crazy volatility. Okay, so we got to focus on the close. Okay, we cannot deny the fact that buyers are still in this green zone. Like the sellers are selling in it, it comes back up. Sellers are selling in it, comes back up. That was a big bearish candle that came right through there, and the buyers are buying it right back up. So we got to continue to wait. But we have lower highs above us, lower highs above us. There's just some accumulation in this block. It is showing that it is a strong buying block, but if sellers continue close inside here, it could break it down, break it down. Close to 9 a.m., we're going to do NASDAQ and we're going to do US 30. And then we're going to get ready for Wall Street. Okay, so you see how the sellers closed in the green block? Okay, so the body opened, ignited, bearish, pushing down. So again, it's got a long wick to continue to fill down to. I like how it's ignited, ready to maybe push down, maybe break that red line. That was coming back up. Let's see if it holds. Like when it comes back up, now we use the yellow line to see if it will be point of interest resistance more on the daily to see it get rejected again. And then this leg coming down, if it comes down, could possibly break this and filling for that low of the day. But right now, still buyers are still holding. Now it's retesting, turned into a spin top. Let's see if they can absorb that blue volume in this candle. It's a small spin top. Yeah, I'm looking to sell myself to continue with this selling pressure, but got to look for it to get rejected maybe at 50% of this bearish candle. Okay, so there it got kind of rejected right at that 50%. And then we're going into, after this candle expires, in the next 3.5 minutes, we have a new 15-minute candle coming in the market as well. So it's still holding this green zone currently. Yeah, it's a strong buy zone. Like it's still holding, but sellers, when they rip through this, they could seriously cause a squeeze that could break the lowest point of the day, because a lot of these buyers who are guys, just for example, all of these buyers here, a lot of their stops are below the lowest point of the day. So if big selling candle comes through, it'll liquidate all of them and then cause a real push and cause real sell-off on gold. Okay, so look at that retest perfectly. Okay, so it retested nicely, turned possibly into a bearish pin bar. Again, got that little bit of bullish volume still in it, continuing to absorb them and push them down. As soon as this candle flips bearish, I might be taking a sell. Okay, I'm just telling you guys ahead of time. Still got that bullish volume. I'm waiting for that bullish volume to get completely absorbed. They're still there. But as it's coming up, let's watch it get rejected again for another time. It's not easy to break zones, guys. Like it's not easy for buyers to break this red block above us. And over here, it's not easy for sellers to break this green block. But eventually, you know, it could break depending on who accumulates more. So looking from top down, we got lower high, lower high, lower high, lower high, lower high, point of interest, lower high. But we haven't created any new lower lows as of yet. Okay, so still buyers are interested in this area. You can look at 15-minute. Okay, so, you know, the 15-minute candles are not that great either. We had this bearish one, bullish one. We had this bearish one come all the way down. Now it's coming all the way back up. So we're kind of just in this range. Sellers are selling, buyers are buying. So it's in accumulation. Both sides are accumulating. You could go to a higher time frame, maybe the hourly. You can see we traded 2 times in here. Last hour at 7 a.m. came back up. Again, during COMEX, we came in here and it's back up. So we got to get this hourly volume to continue to push down. I like watching it on the 5 minutes. Bence, is a head and shoulder on the 5-minute? Head and shoulder? Yeah, possibly, Bence. This location could be left shoulder. There's the head. if we can maintain right here where we're trading possibly in the right shoulder. If we can keep this contained, like down in here or in here in this, we could possibly continue to get lower highs and push it down to eventually break this bullish part of this green box and attempt that lowest point of the day. But it is still technically holding. Guys, I got to speak the truth. Like, it is still holding strong here. The buyers are still here. You can clearly see that they're here. It's trying to break down, but sellers are failing to close below. Now you got a nice big bullish candle coming right back up. Okay, so it's still respecting this. Maybe when it gets a little higher into, you know, like here, 3365, 3366, maybe this is where bigger sellers will absorb and then really drop the hammer down. Maybe going into 8:45, maybe into 9 a.m. Okay, let's just follow it bar by bar, guys. Okay, so that technically is the lower high. Still got some bullish volume. Just getting my cut line to complement that bullish candle. If we trade into it, we got to see if it will hold a higher low, if it comes back down, or holding. But still holding good, strong momentum in that green zone. Guys, thank you. 350 viewers. We do appreciate you guys on YouTube. It's amazing. TPG, you took some profit. Good for you. Thank you, Ron. You are the best. You have been doing this for years now, every day. No other have. Yeah, Dave and I have been here. You guys can look. We started YouTube, I believe it was June 2020, but we were doing private stuff prior to that, prior to YouTube, like 2019. So, but we've been, yes, streaming for 5-6 years now on a daily basis, consistently. You could watch a video of us 5-6 years back, our first video. I guarantee you I was talking about the same price action that we're talking about right now. I guarantee you we were talking about top-down analysis, yellow lines, purple lines, point of controls, zones, boxes, consolidation, sniper trapping gap, going over all the stuff we're going over today. I'm telling you, guys, it works. It works. I've been trading this style for over 15, 20 years, and it works. But you just got to use proper risk management. It's not that a lot of traders have problems with their risk management. Like, they're not lacking at technicals. They're really good at technicals. Some of you guys are better at technical reading than me, you know, like, but you're maybe lacking in risk management. Okay. You know, you're struggling when you make a trade and it goes against you, you have a difficulty time closing it out. You just got to accept, like, sometimes when you take a trade, yeah, you maybe did analyze it, but sometimes the market has other direction. That's fine. Just learn to not over leverage, take the loss, learn from it, and move on. I guarantee you, if you do that in a mature way, you will regain that loss back on your next trade or the next day, and you'll continue compounding that account. It's those days where we get rattled, we get upset, we hedge trade, we revenge trade, we get mad, we over leverage. That's when we start a disaster, guys. Some of you guys are going now months and months of consistency. Do not do anything silly and blow it. You might go look back at yourself and say, oh my God, I just built my account for the last 6 months doing everything, and one day you lost focus, could ruin everything. I had that run too. I was going solid when I first started for 2 years straight, building my account. And then I did something real stupid during an NFP. I'll never forget it, ever. You know, I can't go back and remember all of those nice winning days, but I remember this one day that I lost my focus and I pissed away 2 years of consistent gains. I lost it on one NFP. I kept hedge trading. I kept revenge trading. I lost everything. I lost my weekly gains, monthly gains, 2-year gains. And I couldn't, I don't know what happened, but one stupid move like that cost me 2 years of compounding an account. Please, guys, don't go through that. It's demoralizing. You might even second guess trading. It's hard to come back from that. You know, when you put 2 years of your time, money, dedication into this and you lose it, you're going to question yourself, should I be doing this again? Or but you got to have a sound plan, guys. just understand, we're going to take losses. You're going to take losses. You're not a professional trader. You're not on Wall Street. Okay, so we're just retail traders trading. You're going to try and make the best decisions possible. But if you do lose, it's okay. It's normal. I lose. Dave loses. Everyone in SST, we lose. We have losing days. For anyone to say that they're a perfect trader, that they never lose, they're full of shit. They're lying. Okay, so we're still pushing down, guys. Maybe we got a little M top. Came up, back down. We know where our neckline is now. It's in this green zone. We're coming back up. How Ben said, maybe, yeah, we got a head and shoulder. This is the second shoulder, the right shoulder. And it's a M top also at the shoulder. So, came up, back down. There's the neckline coming back up. So if we get it coming back down, again, all we got to do is get a nice bearish closing body below there. And then it could start that shift to the downside. But it's still holding steady, like down here. We held in the green zone. We're still holding about 50% of this. So now it's trading about here. And we're almost entering 9 a.m. Okay, so yes, could continue to move back up. But overall, we still have this big bearish candle on the daily. So we still got to maybe test this 3366, 3365 yellow daily point of interest. Maybe the top of the red zone. Maybe it will come up to that 200 EMA. And kind of like maybe have a false little breakout there, and then bigger sellers, I mean, like higher time frame sellers, not these little sellers right here, could come in and engage and really then push it down. Okay, so still bearish. We're still bearish on this. Now kind of maybe developing that second top up there. Okay, where it's coming down, back up. Unfortunately, we got a higher low and a higher low, still holding 50% of that. So technically, on the shorter time frames, on the 5 minutes, it's still holding a little bit of support, and it's building a little bit. If we look on the 4 hour, maybe we got to see the 4 hour before we make any rash decisions on the 5 minutes. Look at the 4 hour, okay? So the body it's already retested in there. It came down. Remember, it was all the way down to here, and then now it's starting to build up a little bit. Okay, we can see it on the 5 minutes how it's building, but it's still holding at this lowest point of the day and still building. So we still got to transact back in this red zone. While it transacts in here, we can be watching it on the lower time frames. Like right now, these are the lower time frames, and now we're transacting possibly back into that 4 hour zone, this red zone right here. Okay, so it's bullish coming right through, back up to that daily point of interest. I place more emphasis on these yellow lines than I do these smaller 5 minute red lines. Okay. So this is where we had the big rejection. Like you can see right there when we traded right above that yellow line. That's where those sellers were that dropped it on that leg coming back down. But this green box has been building, and now we're coming right back into it as we move into 9 a.m. Okay. Yeah, so soon I'm going to be switching focus to US 30 and NASDAQ. I don't like going against the Discord signals, things like that. So I wanted to short, but I didn't get that nice closing body candle like below that to continue to short down. I gave you an example of how to buy a pullback, not buy at the high, wait patiently. You had to wait 5, 10 more minutes, 15 more minutes, but you could have got a nice discount buy. So that's what trading is. It's all about just discipline. You ask your friends, maybe they're doing better than you at trading. I guarantee you they're just a little bit more disciplined. That's all. That's the secret sauce, guys. Just discipline. It's not that they can analyze a candle better than you. It's not that they can read the news better than you. I guarantee that they're just more patient and disciplined than you. That's it. What is US 30 doing? Anyone watching US 30? Fill me in on US 30. Barcoding, Jay? That's okay. I like to hear that because then when we analyze it, then maybe we'll start expanding and then we can look for a trade. As long as it's consolidating, well, we're not on it because I don't want it to be trending and we're missing out on a move. So barcoding, we'll break it down and maybe we'll catch a move on Wall Street. Sherry, I agree with you 110%. Patience and discipline takes time to acquire. Yeah, I don't think patience and discipline is like something that can be taught. Like we can't go to school to learn patience and discipline. I think it's got to come from within. You got to learn this yourself. I don't think I could go somewhere and get taught how to be patient and disciplined. You just got to learn it yourself. Okay, guys, I'm just going through the motions. That big body candle did technically close above this red zone, so I'm just going through the motions, making it green. If it pulls back, it could be a potential opportunity to look for pullback buys. Sellers failed to close it below this green block, but the low of the day is currently being protected. That doesn't mean that it's not going to continue to come back down. It definitely can. This could just be a pullback move, and then once we get maybe to that 200 EMA or 50% of the entire range, like right around here, around 3371, 3370 area, that's where maybe bigger sellers could be in the market. Okay, guys, I think we focused enough on gold. Right now, it's 8:55. We got to start to shift our focus into NASDAQ and US 30 to get ready for Wall Street and to give anybody a break that needs a break to go to the washroom or grab a drink. So we're going to continue to move on to US 30 and NASDAQ. And guys, if you're trading gold, I'll refer back to it. But again, just focus on your analysis, focus on your bias, and we're just going to continue to move and look at US 30 and NASDAQ. Again, this is how it's trading on the 5 minutes. I'm going to do top-down analysis daily. We'll look at 4-hour, hourly, and then we'll bring it down to the 5 minutes. Okay, let's start off with US 30. Okay, yesterday we'll switch it up. Yesterday we started with NASDAQ. Today we're going to start off with US 30 and we'll flip-flop on a daily basis like this. Okay. Trevor, you know that I don't track the DXY for any reason? No, I do. It's on another monitor. Trevor, it's too much. Like if I add 4 charts, if we add DXY, gold, NASDAQ, and US 30, if you guys want, I can do a split screen tomorrow with DXY on one side and gold. Maybe we'll do that tomorrow. Let's try that tomorrow. So we'll track DXY and gold side by side on a split screen, and like how we do US 30 and NASDAQ split screen, we'll do that. Okay, I just have it on another screen, Trevor, and I follow the US dollar. I don't want it to be too busy, but you're right. They are correlated, so maybe we should add it. We'll do that tomorrow. Let's test it out tomorrow, and then you guys give me the feedback. If you guys like it, if you guys do, then we'll continue to do it. Okay. It's nothing. It doesn't matter for me. Okay, so let's start off on the daily, shift focus. We're on US 30, Dow Jones. What is this thing comprised of? How is it weighted? These are all basic things that if you do trade this security, you should know these things, right? This is the basics. You should know what US 30 is. 30, it's comprised of 30 securities. Who are these securities? What are these securities? What sectors does it consist of? How is it weighted? Should we be paying particular attention to some securities other than other securities? So all of these things, this should be part of your learning so you can learn what you want to trade, right? NASDAQ, S&P, completely different. So you got to learn a little bit. It's not just jump in and trade the candles. You should at least know what you're trading, right? So let's go back and see what we already can identify and see right there. That was a previous all-time high that came in December of 2024. If you guys remember that big run. And then when we started the new year, kind of sold off. Okay. So that was a big run up. We came up again. It came up in the new year, January, February of this year, 2025. Came up there again. One top, two top. Push down. Let's continue with that block into the future. You can see we just traded in it last week. Came in here, created that all-time high, and look at it pushing down. So we broke down, and look at it. It's retracing back up. We're going to see if it will push back down, or we're barcoding on the daily and we could get a push coming through here. Okay, so stretch that red zone into the future as far as you want. 45,155 is our all-time high on US 30. Where's our all-time high? I'm just going to show you right there with a yellow orange line showing the all-time high right up there, exactly on July 28. What is the most recent low since the all-time high? It's right here, August 1st, starting of the new month, Friday. NFP 43,338 was our return to the lowest range possible, and we've been slowly moving our way back up since then. Okay, now that I have a red zone above me, I'll just manipulate it up to that orange line. And can I find a green zone? Okay, now I found a red zone. Can I complement it with a green zone? Right over here. Okay, you can see how it was resistance right there. It came in, pushed back down, kind of closed above, turned green. I know I'm not turning the colors, guys. I'm just explaining right now because we got to go a little faster because it's 9 a.m. There it was green, but you see that bearish candle closed below. That's where you flip it red again. Look at the retest and then the drop. Again, we closed with blue volume, bullish volume. That's where I would make it green. And this big bearish candle cut through there, but it picked up all that liquidity and closed again above it. Again, it came down there. There's those equal bottom lows, okay? So you can start to see those are those equal bottom lows on the daily. So I'm just placing a yellow line. That might be a point of interest at some point, maybe later this week, acting as support again. You can see how it held green, green, green. Then finally again, bearish volume closed below. Look at the retest, red box, drop. So with this zone again, bringing it into the future, I'm going to bring it right into right now. Look at what we're trading into. So today, we kind of impulsively broke bullish above here, got rejected. We still have the bullish volume accumulating in here. It's barcoding right here. If I was to trap these 3 days of volume right now, right there, I'm going to make it neutral so you can see what I'm trapping. I'm not getting this entire bullish body. I'm just getting what's left over from the top. The next day, bearish. Yes, it did drop down there yesterday, but closed right there. And today, we opened, came back down higher low, but look at the body broke, and look at where it's contained right in there. This could be a bull flag, okay? Could be a bull flag that continues to break to the upside. Then we go bullish. It could just be consolidating, bullish, bearish, bullish. Inside here for today, maybe tomorrow. And we're also creating the neckline. So just real simple. We had this push come down, made a bottom. We're in the neckline now. So yes, it could continue to drive up as a bull flag, or it could get rejected and then come back down, okay? So hard to say right now as it's transacting in here, okay? So let's just continue looking at some critical areas. Let's base it off of this big bullish candle. Okay, there was a close on Friday. Monday, big week, gap down, higher low, come all the way up, close. Let's find our point of interest or point of control on the big Monday. This is an important daily candle. It's dictating the way how we started our week. Look at how strong it retested exactly 50% right there, okay? And then you see, when I look for my bullish point of control, see that yellow line? Where did I get that yellow line from? Who remembers where I got that yellow line from? Those tweezer bottom lows, that one and that one. And you can see how it's playing as support right now at that bullish point of control. Okay, so there's my green zone stretched into the future for this week, next week, and next month. Once I'm done that, I can get rid of my Fibonacci. I could also get rid of that tweezer bottom lows, that yellow line, because I've got my zone to help it. Sorry, wrong line. And then I can just move it up to about 50% right there, okay? So I know that the bottom of my green zone is a very important daily point of interest. I know also the top of this, okay? Have we came back in here? We just came in on Tuesday, retraced, and going back up, okay? So let's just follow the volume. We closed here yesterday. Where did we open today? Let's just continue following, guys. Yellow line, okay? Close, open. When we opened today, it was initially bearish. We've already printed our low of the day so far. There's my purple line. I look, it's higher than yesterday. Yesterday already traded in 50% of that block. Okay, so it is technically pushing up, but we have a lot of resistance above us because last week, remember, the market was selling down. US 30 was selling. Today, let's follow today's volume. Okay, we opened, low of the day, came back to the opening price. We're bullish, 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 bullish. These are bodies. We closed right there. We opened right there. We got to place a yellow line right here. Okay, that's going to be an interesting point. We're going to come back down here. Will it hold? So we can see today we broke out bullish. We took out yesterday's high. We traded. We made a high of the day already. Right there, purple line. And then relative to this big bear candle right over here on Thursday, we're trading. I can see there's 50%. That's probably a little bit above. That's my zone above, zone below. Okay. I see we came up to it. We hit it. Sellers are rejecting it back down. So we're right back down here. Are we going to continue to fill in Wall Street, go back up bullish, hit that high of the day, and we break out? If we do, where are we going to? Are we going to go all the way up to the all-time high? Maybe, if there's some crazy news that I'm not aware of. But what about just testing this point of interest? 44,525 auction. If I'm looking to scalp and take out the high of the day in Wall Street and come up just to that's 140, 150 pips up there. That could be my daily goal today on US 30. Just filling that little bit of imbalance. Once it gets up there, yes, it could continue to break up there. It could fill that wick. Okay, you take it one point of interest at a time. Okay, there's one. Where's my next one? Maybe, there, I got a body, a wick. Maybe right there could be the next one, 44,750. I could continue to do this all day, above and below. But right now, we've got a bull flag. Now let's break this down to the lower time frames. Let's go into the 4 hour. Take a look at how London volume is moving. Look at this move. We came all the way down on the 4 hours, kind of picked it back up on Friday. And then over the weekend and this week when we opened up, look at the 4 hour candles, how they were barcoding in here. They dropped down all the way down, traded right in there, point of control, right in the middle. Buyers responded. Again, some consolidation. Now we're coming back up. Here was futures market open up. Here is late night going into midnight. Here's pre-London and London going into New York. And again, the 4 hour candles are just, consolidating in here, kind of choppy. This could be like a double top where it comes up, back down, comes up, back down. But right now it's building higher, low, higher, low, higher, low. So we could definitely continue maybe to push today, take out today's daily high and push up. We got some room we could drive up here, okay? But it could also come back down. That's why now on the 4 hour, I look at the 1 hour. 1 hour, look at how sloppy the 1 hour candles are. Oh my God. These are the ugliest 1 hour candles I've seen. And these are 1 hour. So this is how it's been trading. Spin top since 6 a.m. 7 a.m. we came up, came back down. Look at where it closed, virtually where it opened. That's 2 hours of trading. Our 3rd hour, 8 a.m. came down, traded. Look at where the volume is. Now, 4th hour, we are continuing to maybe build and get up here. Okay. So this could easily push to the daily high. And that could be a double top. Okay. Because they've already pinned it. From London, 3 a.m. There's the 4 a.m. bearish engulfing candle. So it came up, came down. There's the neckline. Coming back up. That could be a double top. And then they drop it and then do something like this later today. However, we could continue maybe building off of this. Maybe it breaks. And then we're driving. We're squeezing these short sellers. And we got a lot of imbalance to fill back up here. Okay. Hourly points of interest. From this zone, purple tape, if we break the high and then that 44,525 daily area. Remember what I said? It was about 140, 150 pips. I'm a scalper. I'm a small-time scalper. I'm looking for 20, 30, 50 pips, not always looking for 150. If I get 150, that would be a bonus. But right there, I got hourly. It came down, back up. Closed body candle, open body candle, retest. There's got to be a location right here. And look at the number, 44444.95 cents. We could add 44 cents too. 44,444 and 44 cents. Now I'm looking as a scalper just to break, maybe if we break today's high of the day, maybe we just get up to that hourly point of interest. That's 60, 65 pips, halfway to my daily goal, maybe hit my daily goal there, and that's it. Control my risk by going to a break even, scaling out 80-20, leaving 20% run, and then follow my runner and can trade with my runner. So right now you can see how much indecision we have on the hourly. It's building, not the greatest, like how you guys said it was barcoding. I completely agree with you. But now we got to go into the 5 minutes. This is how the 5 minute candles look. Okay, so now I can start to see how we were moving, nice bullish, higher highs, higher lows, higher high, higher low. They pinned it right there. Now I can see 3:15. That was 15 minutes when London double top, come up. There's the neckline, come back up. They drop it. There's the body that closed below. Had I been trading at this time just after 4 o'clock, maybe right there. There's your retest, drop. I could have sold that candle right there, placed my stop loss above here, caught a few pips coming down. There's the natural break of that neckline. Pushed down, it was bearish. Lower lows, lower highs, lower lows, lower highs. Found a bottom back down in here. Look at this bottom on the 5 minutes. Like when it's coming down here, right there, found the bottom. Right there, same location, found the bottom. Again, it just came down there, same location, found the bottom. Let's stretch that into the future. Maybe we're going to come down here during Wall Street. Maybe we'll find another bottom there, okay? But so far it's building. Look at the double bottom. Came down one time, neckline right here in this red zone. Come back down, double bottom. Coming back up. Are we going to naturally break out of here when Wall Street market opens? Is it going to retrace back down somewhere down in here, maybe here, catch a triple bottom, maybe a higher low, breakout, maybe close, retest this, and then we're driving to the highest point of the day, okay? And maybe a possible breakout. It could also get rejected and we're coming all the way right back down, okay? We're still trading in this red zone, but it's building on the 5 minutes, okay? So that's US 30 in a nutshell. Let's add our daily bar indicator so we don't forget. Remember, opening price came down, made the low of the day. We've been filling up really nice and bullish until just after London market opened up. London opened up, has been pushing down, but we're slowly building it right back up, okay? So this is an important daily point of interest, yellow line. We've got this solid green block on the 5 minutes down in here holding. We're building this W pattern, but we still have a lot of resistance up here, okay? So we got to watch for fake outs up here, maybe a pullback, all of these things to consider. 9 EMA, we are currently above it. 200 EMA, we are currently above it. So it is technically building on a little bit of bullish momentum. We've got a lot of bullish daily volume in our candle, but we had a hard rejection when London market opened up. Okay, we could retrace back up to London, fill that wick, and drive for a new New York high. Okay, so that's how it looks. That's US 30, guys. It's 9:12. I gotta finish up NASDAQ right over here. So US 30 will be on the left side of our charts. Right over here. Let's do NASDAQ. So I'll do NASDAQ similar fashion. We'll start off on the daily. Okay, so NASDAQ, previous. You can see now, when candles print, you can now analyze. Okay, that was a previous all-time high. When it came up there one time, back down. Came up again, back down. Came up again, back down. Stretch that zone into the future. Again, it came in there, back down. Now we finally got some new all-time high volume closing above. So what do? We make it, when volume closes above, we make the zone green. Same zone, stretching it into the future. Have we retraced all the way back down in here? Not yet. Maybe in the near future, possibly. Okay, so that's a block below us. What about all-time high for NASDAQ? We just hit it right there on end of the month, July 31st, last Thursday. So all-time high on NASDAQ is right there. There's my orange line. Do we have a most recent low from the all-time high? There's my range right there on that body candle, Friday, August 1st, so the next day. And month end, all-time high, new month open, it's got the lowest point, okay? So we're kind of consolidating in between these orange lines. We do have some daily points of interest I can still figure out. But now, from the all-time high down to those bodies of volume, zone, red, future, extend. Okay, write that down. You know, like as easy it is. All-time high, down to the bodies, zone, red, extend into the future. Should be automatic, okay? Now, if we ever come back up here, might be 2 tops, push back down. Maybe 3 tops, push back down. However, if the buyers are strong and tech is still outperforming and we break out of there, close above there, we might retest this all-time high red zone and make it green. And then we got new 24K, 24,000, new all-time highs on NASDAQ, and tech is still outperforming the markets, okay? That's a fact. But when we get up there, we will decide that. Right now, we're nowhere near that. We got to concentrate on what's going on so far in here. What were the results from that all-time high? Big bearish engulfing candle, engulf all of those. Then we had Friday, NFP continuing to push down, made that low. We came back up, started the new week, Monday. Big bullish engulfing candle, strong candle. Can we identify 50% of Monday's candle or a bullish zone and still see if it's still intact this week? Right there. Okay, so let me just zoom in. 50% of it is right there. That's going to be a yellow line as a daily point of interest, letting me know that that's 50% of Monday's big bullish candle. Do we have a bullish zone still intact? Yes, we are currently trading in it right now. So still bullish. Stretch it into the future. When you're all done that, get rid of your fib tool and let's continue cooking here. So we closed, look at it, closed so strong right here on Monday. No wick. We opened and it just briefly broke out. Like there was a firecracker pop, but no drive, okay? So we can clearly see that now. Let's mark that point of interest right here. 50% of that big bearish candle. I'm going to do this quicker. I'm just going to identify where half of it is. Okay, I'm looking at the opening. I'm looking at the closing. I'm guessing, but I'm right around 23,400. I'm good to go. If you want to do exactly what I just did, get your Fibonacci tool, open, close, figure out where 50% is. You could find your point of control bearish block on that candle, okay? We're nowhere near that, so that's why I'm not spending too much time on it. I got to focus more on yesterday's volume. So it pushed and it's bearish, 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 where it closed right near the low. So can we identify where 50% is of yesterday's volume, just as a daily point of interest? Let's do this one with precision so we're not guessing. Open, close, there's 50% right there, okay? I could do another red zone, but I don't want to confuse you guys, okay? I know myself that we have a red block above us. If you want to continue, you could have done a red block and stretch it into the future, but everyone's going to get confused. I know when it's consolidating, it could get confusing, but let's now follow how we open today, okay? So now I could just manipulate this yellow line just now more to yesterday's close to the open, okay? And because I know we're trading in the green box, so it came down. It made a low of the day today, okay? Right there. There's my purple low of the day for NASDAQ. What time is it? 9:16. We've got lots of time, okay? Made the low of the day. Did we come all the way back down into here? No. So we still have these protected bodies right there. So we're still holding. It came up. Very bullish, okay? It flipped. It was bullish, 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 bullish in this green zone. We came up where just we peaked our head above 50% of yesterday's bearish candle. It's barcoding. Bearish, bullish, bearish, bullish. On the daily candles can consolidate because when the redistribution of this volume to the upside, it will be a big move, or the dump to the downside will be a big move. So both buyers and sellers are accumulating on a daily. Like this is not 5-minute analysis now. So you can see how they're accumulating both sides. Okay. So can we identify today's high of the day? Yeah. Like I can place a purple line at the high wick and it's going to be really two lines really close together. You know, only this 50% was 23,121 and the high of the day went 10 points above to 131. Okay. So technically it did break out above there, but it's still lower. 50% of that bearish candle of yesterday is still holding the volume down, but we still have a lot of bullish volume still left. It could easily come up to the highest point and continue to drive and break out. If we do, let's see today if we can fill the rest of yesterday's bearish volume, get back up to 23,250. Maybe we can break out a little further, okay? For scalpers, you know, smaller time frame, if we just break out from the purple line, yeah, we could. Are we going to go all the way up to that yellow line? Possibly not. Maybe what if it's a lower high halfway? So what I like to do is, if we get a daily high break, you know, I'm not getting too greedy to fill that entire yesterday's candle. I just want to go 50% of that zone right there, maybe to 23,192. Place my line there as a marker. I measure the distance. Guys, I'm renovating my whole home. I've been measuring tiles. I've been measuring baseboards. I've been measuring kitchen cabinets. I got a measuring tool. Same with when I'm trading the markets. There's my measuring tool. So I measure right there, 60 points on NASDAQ. Not bad. Half a daily goal just to fill up to there. Not getting greedy. That's controlling your risk. Maybe go to a break even, scale out 80-20, whatever you want. If it continues to break above there, yeah, you could get that full filling, and then it's 120 pips. So there are 60 pip increments on NASDAQ, right? And you, whatever trader you are, you decide what's best for you. I'm a scalper, so I look for 30, 40, 50, 60 pips. I don't always look for 200, 300, 400 pip moves. Okay, so that's what we got going on the daily. Just a recap of what's going on. It came up, pulled back down, consolidating. You look at barcoding. Yes, we could continue to go up, but also sellers, okay? From the all-time high, that's a lower high. We're still below 50% of yesterday. They could easily absorb these buyers today and start dropping it down. Maybe it could be a possible selling day of a reversal on a Wednesday, okay? So on the 4-hour, okay, we had that big drop on Thursday, continuing into Friday. Found the bottom. We moved back up Sunday night. Monday, the start of this week, you can see where we're getting a lot of resistance. If you just grab your Fibonacci tool from that high, swing low, you'll get maybe 50% of that entire 4-hour range. We consolidated and there's continuing to push it down, but we are building maybe our way back up, or it's a lower high. We're going to lose this and we're dropping. If we lose this green zone in our lowest point of the day, we could have a sell, and it might come down to a double bottom on the 4-hour. So if you're looking to buy, there it made a bottom right in here around 22,700. Place an alert in there. If you're a swing trader, see there's our neckline. If it comes down there, there's your double bottom right in here. You might get a nice pullback entry, and you might be buying the second bottom where it's got that more powerful leg to come up. However, if it closes below there, could lose that structure and continue dropping down. But that's a good point for interest. If I was a 4-hour trader, I would definitely be placing some alerts in that block right there, because you can see the orange and the yellow line. There's your block. There, green box. Stretch it across. Could be your second bottom. Right now we're kind of consolidating in this neckline, and it might continue to move back up. Maybe it doesn't need to come into this zone as of yet. It's building right here and will continue to go up. On the hourly, how do we look? Okay, big drop, coming back up, retracement, lower high, dropping, but no more lower lows. We got a higher low coming back up, kind of like a double top up here with that coming bapoint down. It is moving it, diverging away from this green zone. I can see it came deep down in there during 6 a.m., coming back up 7 a.m., coming back down. That hourly point of interest still holding. This is where I place white lines as a scalper. I can see that there's an hourly point of interest here. How many times do bodies close and open and retest this area right here? 23,050 right there. It came down, body closed right there. This body opened, came all the way down. Look where it closed, right at the white line. This one opened right at the white line. This one was a bearish hourly candle, come down at 8 a.m. Look at where it found hourly support, right at that white line, back up. So that's what I would be watching if I'm a 5-minute, 15-minute trader. Is bearish volume going to close below that white line? Will it use that white line as resistance and continue dropping down? It'll fill that wick, get down to that daily level, maybe down to the lowest point down here. But right now, higher low, still holding, consolidating. We could drive. We're not too far off from the high of the day right here. So I could get rid of this yellow line right now because I'm more focused on the high of the day. So you see how this yellow line is irrelevant now. It's too close. Get rid of it, okay? And let's focus. Now you see how they're strategically placed apart. Yellow, white, purple, yellow, and yellow. And remember, I understand my yellow is a daily point of interest. The higher, the more weight it holds. Here's another a daily point of interest of resistance. This is today's daily high. We hit it at 4 a.m. Eastern. This is my hourly support right now, holding the market the last few hours. And then that's my next daily point of interest. And then that purple line is low day. If I look below this, I could definitely start to dissect these hourly candles and find some other levels on the hourly. There's that big 4-hour block I was just talking about down there, okay? So you can see, you just pick your time frame of what type of trader you are and you trade accordingly. I'm a 5-minute, 1-minute trader. So I look to buy and sell off these levels, I place more emphasis on these. You can see when we hit the high of the day, right now in the 5 minutes, we got a red block right up there. Stretch it into the future. There's a red block. And then I can see next move it came up. Look, They're protecting it with lower highs. I'll place a red line right there, right at that wick. It came up, back down, came up, back down. So they're protecting the high of the day so far on the 5 minutes. This could be a big double top going into Wall Street. Coming up, one top, neckline, that hourly white line, coming back up, double top. Here's our M coming down. So will it break this and then drop? Are we going to fake out, come back up, and then go back up? All this shit. So this is a lot to watch for. But right now, it's hit its double top. They're protecting the highest point of the day. They're bringing it down, lower highs, but it's coming in a green box. If we can take out this green box, take out a low day, it could be a significant drop in the market today, okay? So again, let's add our daily bar indicator. Remember the opening price, made the low of the day, flipped, came all the way back up. There's the highest point of the day. You can see exactly what time, 4 a.m. Eastern, just after London, came back down. We still have this bullish volume. That's what's representing this green box on the daily candle. Can we hold? Can we fill back up to our wick and drive for a new higher point of the day, okay? Add your indicators if you like. 9 EMA, we're right kind of below it currently, and our 200 EMA is right at it. So our 200 and our 9 are right at each other, 5 minutes going into Wall Street, okay? Let's place these two charts side by side. If you don't like this big green zone or red zone, you can eliminate that zone and then just follow the lines, okay? Okay, are we all good, guys? Yeah, hit the likes again, and subscribe to the channel. If we get 82,000 subscribers today, we're only off by, when we started the call, I think it was by like 25, 30 subscribers. We're going to give away that SST daily indicator, and it's got a Fibonacci tool attached to it as well, that you can add or take off or add whichever ratio you want on your charts, okay? Just looking at gold. So gold kind of closed above there, kind of barcoding. Yes, we could push down. See where it caught some resistance? Okay, at that 200 EMA, that's 0.5. 50% of the entire range of today's daily candle is right there. So it is a point of control. Could definitely continue push down, but it built off this block. They're protecting the low day, built a little bit off of this block. So right now, you see how it's barcoding. Bullish, bearish, bullish, bearish. It's too tight. We won't be looking at gold during Wall Street, unfortunately. We'll be watching NASDAQ and US 30, okay? Again, I go through the motions, look at your spreads, everything. Excuse me. If you were trading gold and now you're switching over to indices, maybe your contract sizing is different. Maybe your lot sizing is different. Again, don't do any mental errors. You might regret it later on. Fix everything up. And let's see how the markets open up. I'm just going to look in the pre-market, see what's going on in the pre-market. Any big names? Wow. Okay, so AMD. Remember, Advanced Micro Devices had their earnings yesterday. They missed their revenue, and they are down 5.3% in the pre-market. So AMD will technically affect NASDAQ and S&P 500. Not so much Dow, but Dow could ride on the momentum. So AMD is down 5.5% right now. Micron is down 1.1%. NVIDIA is down 1% right now. There's a couple green. Meta and Microsoft are green 0.5%. Nothing big, nothing crazy. Amazon is a green 0.5%. Apple is up 1.7% in the pre-market. Palantir, they had their earnings the other day. They were up almost 8% yesterday. They've kind of retraced down a little bit. They're down 1%. Holy shit. SMCI. Guys, Super Micro is down 17% in the pre-market. Wow. Okay, so holy shit. Super Micro stumbles. Q4 results disappoint. Guidance speaks of a sell-off. Okay, I'm just reading the article here. They had earnings. They are down 17% right now in the pre-market. That would be a good, put it on your watch list, SMCI. Maybe if you want to dip buy, you're getting a 20% discount. Maybe let the market settle down. That might be a good opportunity. If you believe in SMCI, if you believe in tech will bounce back. They gave a shitty forward guidance.
and a sell-off. But, when you're looking for those discount buys and a good swing trade to hold on or accumulate, I'm adding SMCI on my watch list. It's down almost 18% in the pre-market right now. That is massive, guys. Anytime a security is down 20% off of it, wow, okay? Even if there's a little bit of a dead cat bounce of 5-10%, you could make it. But you got to be careful because those could continue dumping down. It could be negative 25% day if shareholders really start selling. So you got to be careful. Okay, so that's what's going on. SMCI, guys, super micro. Wow, okay. That will definitely affect how markets open, especially NASDAQ. Okay, so you can see now double top intact. It came up, US 30, back down, neckline, second top, clean second top, ignited bearish candle, 3 bars pushing down. We're going to test this support with 25 seconds to go into Wall Street. Look how they designed this shit. It's unbelievable. And NASDAQ also, maybe a possible double top coming down. Okay, so market is going to be volatile just on these earnings and pre-markets. Again, have rules, guys. You can trade right away. Let's follow the 1 minutes right into this open. It's going to be exciting. Okay. So these are 1 minute candles. I just want to follow the first 1 minute. Okay. Here's US 30 ignited. Let's see if we get a drop. Super micro down 17.25. Shopify reached a 52-week high at $145 a share. NASDAQ is still holding green. Shopify is up 14% on their earnings. Big dump on US 30 on the 1 minute. NASDAQ will possibly continue to push down. Wow, okay, this is the first 1 minute. This candle still has 33 seconds to go. Holy, will it reach that daily position all the way down there? Okay, so US 30 is dumping. NASDAQ shooting star. I'm going to go in on a sell on NASDAQ, okay? I'm going to place my stop loss above, on the 1 minute too. I'm on the 1 minute. I know it's early, but I just want to place my stop loss above that 5 minute resistance. And I'm looking to see if NASDAQ can maybe push down in here. I know I went in a little early. They might come up there, scoop that liquidity, and then drop it down. But I'm testing out NASDAQ to see if that tech can continue to maybe push the market down. I told you guys yesterday I'm just going to focus on 1 minute just for the first couple minutes when markets open. I think they're going to get me. Okay, so I'm out of it. Yep. They got me out. They're going to possibly come scoop liquidity up here and then push down. I don't want to get faked out at that high of the day. Watch that high of the day, okay? Watch it, guys. Let's watch it now. Shift focus to the 5s and watch on the 5s now. Okay, so, those early sellers, like me, just testing out the market, got kind of trapped in there, but now they got that bigger liquidity. They came onto those pending orders. Now let's watch this 5 minute volume, see if it will come down. It's still very early, just 2 minutes. I'm still drinking my coffee right here. Okay, so they took out that high. Let's see, we can follow where this volume will close. Are they going to take out the high of the day? This is going to be really interesting. On the reports of those earnings, especially tech, let's see. Let's just follow. Let's see if they'll take out the high of the day and what type of response there is up there. If US 30, this 5 minute body candle closed below, this green box that was support there, support there, support there, I'm going to make it red. And then maybe we sell pullbacks. Wow, okay, so US 30 is really, really pushing down. Let's see if it attempts that lowest point of the day, that purple line. How to find pre-market? Add Yahoo Finance, add Webull, add Robinhood, add Market Watch. On TradingView, there's a pre-market heat map. You can find it anywhere. Just look at after hours. It'll just add the securities. It'll show how they're trading the previous day, and then it will say AH after hours will show their percentage, and then PM is pre-market and will show what percentage is trading in the pre-market. But every platform should have wherever you can add a security. just like on your watch list. Just add that security. Holy shit, look at US 30 dropping. Okay, so the candle flipped to a shooting star right now with 1 minute to go. Okay, so I'm going to assume it's going to close below that green box. Any retest could be this yellow line. If you get all the way up there and get that retest, that would be perfect. But, you know, this could come back up, retest this, go back down. Wow. Okay. So big push down on the first 5 minutes of US 30. NASDAQ is holding bullish, considerably bullish with all of that news. Okay. So just going to watch this US 30 close. Okay. So it did technically touch the lowest point of the day. It did break for a new low. You can see just broke below that wick. Let's see where this thing is going to close. NASDAQ does not have to follow. It does not. Okay. It doesn't. Remember, these are two different indices. And NASDAQ is attempting to take out that highest point of the day. So let's watch where these bodies are going to close, both of them. And then you see the retest point. If you want to buy NASDAQ, maybe a retest would be this red line. Prior resistance could turn into support, 23,100. Okay, so let's see if it will break out that highest point of the day. Okay, so, you know, like I know that there's a lot of traders that want to sell that high of the day up there. It's a spin top. Just be careful here because it could continue to break out. Yeah. It's already retested. Okay, I'm going to sell now, and this will be my final trade of this Wall Street session. I'm going to sell on NASDAQ at that where they just touched that highest point of the day, and I'm looking for it to maybe retrace back down to that green zone. Okay, so I'm going to sell on NASDAQ. Stop loss placement. Okay, so I can see briefly above there where it came. Someone switched my tools around. Right there. Okay, that was that peak where it came up and then back down. So I want to keep my stop loss just above that peak, right above there. I could definitely give it more room to breathe, place it above that daily point of interest. Don't want to give it that much room. And then see if we can get some bearish volume closing back below that red line and then start to maybe push down on that big bullish candle. Okay, so there it comes down. Again, looking at that red line, that's a marker right there. Okay, so that's about 20 pips. If it can engulf the entire candle, we're looking at 40 and get down to that green box, about 50 pips down there, okay? So now I'm going to a break even. I'm going to a break even, okay? I'm at a break even up. I'm taking out 80% down there. I recovered my first loss, okay? So I recovered. The point, it was to sell at that highest point of the day. That was where it was, okay? So you see, I went in a little earlier. I got caught with my hands on the cookie jar, but I came back and followed that NASDAQ volume. So I just took out 80% down there, and I got 20% running at break even. If this can bearish engulf and close below here, it could start to cut through a lot of this green zone, okay? So that was more of a recovery trade at that highest point of the day. So it's kind of like a double top. Up here, it came down, they brought it, they kind of, you know, buyers bought in, and then they brought it right back down. Let's watch how it will close now. Okay, and also US 30 is retesting the yellow line, rejecting. Let's see if it will continue to take out the lows and maybe close below there as well, okay? The remaining 20% I have at a break even. Yes, it could get stopped out, but majority, bulk of the trade, I took out right at the bottom of that candle, just prior to hitting that green zone. I measured it there for you guys. Showed you around 50 pips. Now we got to watch where it will close. Will it close? Will that bearish volume close below that red line? That red line was a rejection there. We closed above it. Can the sellers close below there? Because I want to make that red line resistance in case it pulls back and then gets a lower high and continue to drop. Pablo, let's make some pips, buddy. Okay, AMD is down 6% right now. Micron down 2%. Nvidia is down negative 0.5. Just looking at some like tech names. Microsoft, Meta are just in the green by 0.25%. Google, nothing big. Amazon, just a quarter. Tesla's up 1%. Apple's up 3%. Apple, SoFi is down 2%. SMCI is down 17% right now. Okay. So let's see where this thing's going to close in one more minute. Wow, big bearish engulfing candle. So, they could have trapped those buyers. And now they're coming down hard on them. They're dropping the hammer on them. Trevor, you out on NASDAQ 67 pips? Not bad, not bad. Okay, let's watch the close of this candle. Wow. Okay, 30 seconds to go. Okay, I still got a runner. The runner gets down to that white line. You can see that. That was hourly support. Let's see if Wall Street, we can break this. And then we could trickle down. The last position where they saved NASDAQ was right here. This was just prior to 7 a.m. Eastern. If it gets down to 23,000. Okay, so let's watch this big bearish engulfing candle. Will it engulf this entire candle? That was that big blue candle. Bullish. Here is close. 3 seconds. Might be closing near the low. Okay, there it is. So 50% of that candle, I'm going to just move my cut line like right there. You see how it matches with now the resistance of those bodies of the candles. So if we come back up bullish, we still have resistance right here, but we got the 9 and the 200 EMA just above us. Shallow pullback could easily break this and break those wicks and continue dropping down. Okay, this is where sometimes if you're looking to continue to add a position, you could trade with the momentum of the market, but we just have those low wicks to break. And then we're going to retest this white line. That's where we had that hourly support. And we'll see if the sellers can break that support level down there. So yes, it could bounce, come back up. We're at a green zone. There is buyers there interested on buying. But now we got to rely on our resistance above us. You have a 200, you have a 9 EMA, you possibly have the 9 crossing below the 200 to create that bearish crossover. And we also have the resistance there. And now we got a shooting star candle pushing down. So let's see if we can drive down to that hourly white line. That would be about 65 to 70 pips down there. But if we can break it, we need to break it. We got to cause a new lower low, and then we'll follow the volume behind it. Okay. US 30 is still holding this lowest point of the day right now, but you still have retest point, a little bit above, a little bit below that red line. That's what I would do, that zone. And if sellers can continue to hold this thing down, could break that low of the day and US 30 could start dropping. Okay, so we got a spin top candle coming up, going back down, coming up. Let's see, guys. It's not easy to break supporting levels and demand levels. It's not easy. Okay, but let's see what this Wall Street volume and if it can in fact do this. Gold is coming back down. Yep. Yeah. If it closes below, again, we have static levels at 3365. If it closes back below there, you could go back into sell. That's what static zones are. You could trade off those zones all day. Okay. I'm just in an active trade with NASDAQ. I got 20% in here, still watching it. US 30 is still holding. So we found one bottom. That's okay. That could be a first bottom. We come back up. Maybe they'll push it back down. And if it's not a double bottom, it's breaking. We're going to have a new low of the day breach and dropping down to 44,000 down into here. Okay. So let's see where this candle will eventually close. I have a different method of trading, guys. Sometimes I do speculating trades, feel out the market, see how it's moving. I go smaller. You saw I went on the 1 minute to watch how it's moving, but then I went back to the 5 minute, the higher time frame, and then I sold down with it. It just they had to trap those buyers. So I was one of those trapped buyers early, figured it out, and continued to trade with the overall momentum of the market. I recovered my loss a little bit more, but again, I'm staying with the volume. If I get taken out, 20% gets taken out at break even. But I'm going to continue to watch these zones all day today. Like later on, like this is just Wall Street market open, first 10, 15 minutes. If we lose, if buyers cannot hold this, could be a big selling day. Okay, so now it's coming back up, retesting 50%, lower high. Can they contain these buyers? Next candle could have come down bearish and break. We're going into 9:45, so our first 15-minute, I know there's 15-minute candle traders that are waiting for the 15-minute bar to close. You see, we opened very bearish on US 30, came down all the way down to lowest point of the day. Now it's got a little bit of a wick. Still have 15-minute bearish volume. NASDAQ is showing like an indecision 15-minute candle. We had that original open where it came all the way back up. We had that big push down on that 5-minute bearish engulfing candle, but we're slowly finding a little bit of buyers bringing it right back up, okay? And again, guys, I go with the flow of the market. If the buyers are still holding here and, they can close it back above the high of the day, we could have a continuation of a bullish day. Maybe it was just a little blip in the market, but if you look at the overall volume of NASDAQ, we're still inside here. Bullish, bearish, bullish, still accumulating. Yes, the candles are much bigger than trading prior because we have Wall Street volume, but this could turn bullish. Like the daily candle is still very bullish. They're respecting the hourly support. It's not really breaking down. Just maybe SMCI is down 17%, but it's not heavily weighted in the NASDAQ like the other heavyweight securities in there. It's one that's bearish, but the other ones might make up for it and could be a considerable bullish day. Apple is up 3%, doing well, and now we're coming back up. So my 20% runner right there got taken out at break even. So, that's why, guys, I scale out 80% on a move. Now I got to continue watching. It's 8:45 now. 9:45. We're testing again that red zone, that highest point of the day. Are they rejecting it? That volume closed above there, so it could be bullish still. US 30 could be trading where it's making a neckline. One bottom neckline. We could come back down, maybe a double bottom, maybe a break. Maybe we'll close back above here. We retest this, and we're filling right back up to where Wall Street started. I stay with the volume, guys. And it's barcoding. US 30 bearish, bullish, bearish, still barcoding. To me, NASDAQ is still barcoding with a bigger range. Bullish, bearish, bullish, bearish. Okay. It's not going to just trade inside this neutral zone all day today. It's eventually going to try and maybe break out for a new high of the day, or sellers are going to continue accumulating and it's going to break down here and drop. Okay. So you just got to stick with the volume, guys. Unfortunately, we end these calls at 10 a.m. I would love to stay with you guys going to 11 and noon. Some days we will, but I got a lot of work to do here. Okay. So there's the barcoding. Bearish, bearish, bullish, bearish. Let's see. Are they going to push it for a new low of the day down in here? Will it close below there? The daily candle is turning into a bearish pin bar, possibly a shooting star candle, and could really kind of drop some volume down. Any thoughts on gold? We're at that point of control right here, this point of interest. Watch if volume is closing below. You could continue to go down and sell down with this. That's what I was saying. Maybe it just had to come up. They had to trap those buyers at that 200 EMA at 50% exactly of the entire range of the candle, and gold could continue to maybe possibly push down. If it kind of comes back and closes above here, it could retest this and move up bullish. Okay, but I'm not trading gold at this time. I'm more focusing on US 30 and NASDAQ during Wall Street. And then if I was to trap US 30, like I traded more NASDAQ today, but normally I'm focused on my US 30. I would be boxing this in right here and just watching again who accumulates more. Bearish, bullish, bearish. Will the bears accumulate more? Close it below there. We could get that continuation drop. This could be a bear flag. That big drop, we're in a flag. So has a high probability it's going to continue to move down unless the buyers can close it above here. Okay, we're going to close in 1 minute, 45 seconds. Look at NASDAQ, retested, bullish now. Okay, so it's breaking for a new high of the day. Look at the daily candle flipping. So this could be bullish, going into the next little bit. Let's follow how both of these bodies are going to close. I might have one more trade left in me. I'm looking at US 30 maybe, just checking spreads. US 30, my spread is 1.2. NASDAQ, I got 0.8. So let's just follow this. Big bullish move coming back out, follow volume, closing. If it closes like this, flip that red zone green, a pullback is right at that zone, 50% of that candle. We still have 44 seconds. Let's see if it's going to fake out the market, come back down, or hold and close above there. Okay, so they did create a new high of the day. There's the wick on the daily candle. They've rejected it back down. Well, that volume, if it closes below that red zone, it's still a red zone. Sellers could come and push it down. So see how it's a bearish ignited open? So it could technically come down. Okay, no volume closed above there. So it is still a red zone, ignited bearish candle coming down. This could be kind of two tops. Came up, back down, came up, second top, bringing it right back down. US 30 looks like it might impulsively break this low of the day in this bear flag. Sometimes, again, I'm going to go on the 1 minutes and watch. Look at the 1 minutes, how they're just kind of clumped together in here. This is 1 minute now, guys. Again, so this 1 minute candle, will it break and close below here in the next 24 seconds? So I'm on the 1 minutes. It did in fact break. Okay, so let's see if it will close below there. I might jump in on the next 1 minute candle if it kind of retests or give me what I'm looking for. And then I'm going to try and ride that 5 minute volume. Okay. So here's the close on this 1 minute candle that is breaking new lower low with volume. Let's see if it will close below and close near the low. Yes, it did. Okay. So open blue. Let's just see if there's a quick little rejection. I'm going to go in. Okay. And I'm going to place my stop loss kind of above where the 5 minutes. I'm going to ride the 5 minutes. So I entered on that 1 minute candle. I want to see if it can kind of maybe push down to this green zone a little bit. My stop loss above that 5 minute zone right up there. I'm going to sell on US 30 on this continuation bearish move to see if we can continue to push down. If we trade into the green zone, okay, guys, sorry, let me just get the ruler. Okay, if it trades into this zone down in here, what do I have? Okay, so there's a lot of wicks right there. I'm starting to dissect. Wow, all of these spin top candles at this time. Maybe right down into there. 44,050 area. Okay. If it can, oh, it did push down right down to that red line right when I just did that. When the candle opened. Double top on NASDAQ. Okay, so they faked out the move to the upside there and bringing it all the way right back down. It's Wall Street is in a consolidated phase, barcoding, bullish, bearish. Again, it's both sides are accumulating. They might extend it to the upside. They might extend it to the downside. Okay, I'm in this sell, a little bit of drawdown now, but I got my stop loss above that zone. Okay, this is going to be my last trade of the day. Got to follow this volume. Again, maybe I went in too early on those 1 minutes. Maybe that's my my mistakes today. Again, I went in a little too early on those 1 minutes trying to ride this 5 minute volume. Could have waited for this 5 minute volume candle to close. Again, learn from my mistakes. Maybe me going in on the 1 minutes is a little bit too early. I'm getting faked out. So I got to continue to watch higher time frame. The 5 minute is the higher time frame from the 1 minutes. Will they protect the opening position, bring it back down, close it below that purple line, and then continue to push down? Yeah, 2 minutes are really nice too. 1 minutes are way too fast. Sometimes 5 minutes are too slow. 2-3 minutes are nice too to incorporate. Still trading the zone. Choppy, okay? Wall Street is choppy. but it's got a higher low coming back up. If it closes back above here, you could have a natural bullish breakout. Remember, all these sellers that are selling could get squeezed, and then you have a natural breakout. Same like with me here. I could get squeezed out of this trade. I'm selling, but the buyers are still accumulating it. So, it's barcoding bullish, bearish, bullish. It could break out of here. There's my stop and squeeze for more sellers above me. Watch the closing volume, especially on NASDAQ. It's back up there. It created a new highest point of the day. Watch that 5-minute volume closing. Could break out bullish above here. I'm going to technically get stopped out in just a second. As soon as this candle flips bullish, yeah, I'm out. Okay, so I'm out of that. That's it. I'm done for today. Yeah, the markets could rotate right back up. So not really, no sellers down there. I was looking to see if the sellers were there. They're not there. More buyers. Ignited bar, short wick. Oh my God. I want to continue trading this volume, but this is where I get really aggressive trading this stuff. I don't know if you guys are ready for this type of stuff, but this is the volume I love to trade. I love trading this stuff. You could use a little couple feeler trades. You could recover real quick, but now it's bullish ignited. You could get the nice big Wall Street accumulation. Now you're moving into 10 a.m. I think 10 a.m. they're going to start to redistribute this, all this accumulation. Any news today? 10 a.m. Just 10:30. The crude oil inventories won't really impact NASDAQ and these securities. But guys, that's it. It's 10 a.m. I got to wrap it up. And tomorrow we'll be back for, again, another session, 7 to 10. We'll do the same thing. We'll focus on gold. Maybe tomorrow we'll bring gold with DXY split screen so we can see how they're correlated. Sometimes they're correlated, sometimes they're not. We'll take a look at them tomorrow. If you're going to continue to trade this volume today, guys, again, just let it accumulate a little more. And then when it's ready to be redistributed, trade accordingly. Gold just moved. Yeah, everything is going to be moving, guys. As we go into 10 a.m., yeah, it's still moving bullish. You see, respecting green zones. I was trying to sell the bear flag. It was pushing down, kind of consolidated, and in the bear flag. But you see, I got caught on that impulse move going down. I went on the 1 minutes, but maybe the 1 minutes was what trapped me there. So I should have stuck with the 5 minutes. Had I stuck with the 5 minute waiting for it to close, I would have seen it came down there, closed there. I don't think I would have been selling. I would have been more inclined to buy. But that's the problem, guys. If you switch to the lower time frames, you're more prone to make some mistakes. But just manage your risk when you're trading them. When I go to the 1 minutes, I don't over leverage too much. So I test things out. The more confirmations I get on the 5 minutes, that's where I start to trade accordingly. But they're playing games now. They're trapping everybody. They're also trapping buyers up here. Those buyers up there got trapped coming back down. My bias is still bearish. I'm watching this daily bar indicator. It's still a bearish pin bar. Definitely just once it accumulates a little bit more buyers, it could be dropping. So it did break through there. Yes, I did sell that impulse and got caught, but if I'm still trading this afternoon, if it comes back down there, closes below, that's that drop coming down. Okay. I'm bearish on US 30. I think it's going to break down today. That's just my bias. Bias means nothing unless you have volume cooperating with you and closing below levels. So Trump now is talking. Trump to impose an additional 25% tariff on goods from India. So tariffs affect the markets. Tariff affects the U.S. dollars. Tariffs affect gold. Tariffs will affect the way how NASDAQ and US 30 trades. So, guys, it is, I admit, no drip, it is disgusting price action. It is, yeah. But again, just don't try not to trade this as much as you can. Remain patient. Let the market do its thing. I know it's real shitty price action right now. It'll get you caught in selling, or I guarantee you, sellers are getting caught like myself. Buyers are getting caught as well, okay? You saw how NASDAQ opened up, trapped a lot of traders. If you have an open stop loss, you could be still live in either direction. But you got to go reduce your risk substantially, because now the range picks up. Just guys, wait it out is all I'm saying. You know, if you start to see that we're barcoding, try not to trade this stuff. Be on the side of who's accumulating more by watching. If you do need to engage, go smaller. So, because if you get faked out, you can easily close it and then wait for confirmations. That's what I do. Okay. If you don't nail the trade right away, you can kind of feel it out. I like this bearish bar coming down. Let's watch this close on US 30 right here in the last 40 seconds. Okay. Came back above here, pushing back down. Will they engulf this bar? 10 a.m. If you look at the hourly candles, look at the hourly candle, okay? So the hourly candle could close below these previous hourly candles right here. And this could dictate our move. This, like right there. See how we have a body and a body. This hourly volume could close below there and also close below that lowest point of the day. Big hourly drop. You got indecision on the hourly on NASDAQ. Here it is. Here's the close in 7 seconds. Oh my God. Okay, so there's the nice close. Didn't in fact close below that low of the day. This could be that impulse continuation to the downside. Are you willing to take another impulse trade? I wouldn't do it if I were you. I would wait for a physical bearish body to close below here, because what it could do is it could just break bearish, come down, fill that wick a little bit and create a higher low and then go right back up. Okay, so you got to wait for that bear candle to close below or break for the new low, and then when it comes up, it retests this point. That would be your selling point, and then drop. Okay, that's what I would be watching for if I was going to continue to trade US 30. It still kind of could consolidate here. Similar with NASDAQ. Bullish, bearish, bullish. It's barcoding, guys. This is tough price action on all time frames. This is really difficult. The 15-minute is not showing much. You know, the 15-minute has all that indecision, okay? So you got to, again, wait patiently for a 15-minute body to maybe break and close above here in order to continue to get that bullish momentum. Same with here on US 30. If you're a 15-minute trader, yeah, there was a couple impulse breaks that could have got you caught, but you got to wait for that volume to close. So it's just patience, guys. Wait it out. When in doubt, wait it out as much as you can, okay? But we appreciate everyone. Thank you guys so much. Hopefully we got 82,000 subs. I haven't checked, but if we do, someone is going to win that SST daily bar indicator with the fibs attached. We'll see you guys tomorrow. Same time, 7 a.m. Tomorrow's Thursday. We'll have more news tomorrow. We have our weekly unemployment claims and some other news in the market. So today was a no news day. And it's a choppy day. Could be like this until we get some news. Later this afternoon, we have the 10-year bond auction in the U.S. just after 1 p.m. Okay, guys, I would love to continue to just sit and trade this stuff with you. I love sometimes trading this volume, but I got to get out of here, guys. So we'll see you guys tomorrow. Thank you guys so much. Have a good day. Congratulations on everyone. If you're doing well on your trading, there's that shooting star candle coming down. It's going to close in 2.5 minutes, so continue watching this. My bias is still bearish. Just maybe that inside candle, they got me. But, you know, I like to continue trading with the volume. But I have to step away. So there's got to be sometimes you got to step away from the markets. But we'll see you guys tomorrow. Thank you guys so much. Have a great day. Bless everyone. We'll see you guys tomorrow. Thanks, guys. Have a good day, everyone. Enjoy the rest of your day. If it's sunny where you're at, all time, get some sun. See you
guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.